Okay. Good evening, everyone. Welcome to Byju's Exam Prep IAS. This is Sham Kagod here. Now, before I start the discussion, if there is no issue with the sound, can you please give me a thumbs up? Done. Let's start. Thanks. Let's start then. So, yesterday we started with the concept of national income aggregates. I hope remember we started with the idea of national income aggregates. Before that, we discussed certain aspects related to microeconomics, right? For example, we discussed the classification of goods yesterday, different classification, normal goods, inferior goods, given goods, Veblen goods, substitutes, complementary, intermediary, final, etc. So different classifications we have discussed yesterday. Please remember this, right? Please remember the classifications for a very simple reason. Many questions in the prelims. Again, some of you are asking, I was just checking the comments after the class. Many of you had asked, sir, is microeconomics relevant for mains? My suggestion is that if you look at the trend of UPSC, again, the analysis is based on the UPSC trend. UPSC doesn't ask a question from microeconomics in the mains. I'll repeat it. UPSC does not ask question from microeconomics. Let's say concept of law of demand, law of supply, etc. They do not ask these kind of questions in the UPSC mains. Prelims, like I've mentioned already, once every 2 years or 3 years, right, there is one question in the prelims, and I've shown you what kind of questions are asked. Some of them are straightforward, some of them are, right, kindly remember that these are conceptual. For example, elastic demand, inelastic demand, right? If this will happen, what will happen? If this changes, what will happen, etc. Like this, conceptual questions. So please read, right, focus on the concepts more rather than simply by hearting everything. After that, we have discussed the concept of the savings, capital formation, investment, etc. And related to that, I've given you various concepts. For example, how do you calculate savings? Why savings are important? Why do we need to promote savings? And if you want to have a capital formation, why you should know, why you should have a very good financial institution structure? Why should people always be let's say focused on investment in the market? In what situation they will invest, etc., etc. Right. So we have discussed many concepts. After that, we started with national income aggregates. In national income aggregates, you, I hope remember this. Yesterday we started with GDP. Focus on that, right? Because again, I'll tell you one thing. Although I've given multiple aggregates here, I've given GDP, NDP, NNP, GNP, national income, etc. If you're reading the newspapers, you will agree with me. This is the most important parameter, right? Let me know if I'm wrong. Okay, the newspaper people or the people who are reading newspapers, they will agree with me when I say, out of all the indicators that I've written here, if you are reading the newspapers, you will simply say, sir, yes, sir. This is the term which we come across very often in the newspaper, very, very often in the newspaper. So this is very much important. Focus on that. Okay, now let's start. Yesterday we discussed GDP, gross domestic product. Okay, what is this gross domestic product? Gross domestic product refers to the market price of all the final goods and services which are produced in a country, right? Because I'm discussing from the context of India, let me say whatever is the final goods and services produced in India, get the sum total of the market prices of all of these final goods and services, that will give you GDP, gross domestic product. Now, who will publish gross domestic product? The calculation, publication, etc. It is done by NSO, National Statistical Office. Don't worry, long form is given in one of the slides. You will get it. Next important point. GDP is published or calculated for a quarter, right? Do you remember the concept of a quarter or not? It is published for every quarter. It is published for half a financial year. And it is also published for a full financial year. And financial year simply means what? It will start from the 1st of April and will continue till 31st of March. Right, from this year April to next year 31st of March. Next point, there are three methods to calculate GDP. There are three methods to calculate GDP. One is expenditure method. Second one is the income method. Third one, right? The third one is basically the output or production method. In case of a production method, we will find out how many final goods and services are there into market price. That will give you GDP of a country. In case of income method, we will get the sum total of all the factor incomes in a country. Whatever is the sum total of all the factor incomes will give you GDP. Third one, right? The third methodology is expenditure method. Get the sum total of expenditure done by the government, by the consumers, that is you and me, plus the companies or firms. Get the sum total of all the three. From this total, subtract what has been imported and add what has been exported. Whatever is left out is basically the final goods and services which are produced in India. Right? That is the third methodology, expenditure method. Now, in the last part of the discussion yesterday, I proved whether you use income method or expenditure method or output method, the value of GDP should be one and the same. Right? I hope you remember that calculation. Right? This is the calculation I'm talking about. Whether you use expenditure, production or income method, the value of GDP should always remain one and the same. The value you should get is one and the same. Now let me continue. In fact, if you remember, I told you one more point here. Although three methods are there, the most important method, I repeat, although three methods are there, the most important method for you will be the output method or production method. Right? We use output method or production method. The NSO, National Statistical Office, which functions under Ministry of Statistics, will also use one more method, expenditure method. They will use this method, but they attach a high priority. They give a very high priority to the production or output method. Now, how it is done? Right? Yesterday, many of you are asking, sir, what about taxation? Right? What about this? What about that? Today, I will tell you how the actual calculation is done. My advice to all of you will be to focus on the discussion first. Focus on the discussion. Let's start. New method has been used by the government starting from 2015. From 2015, we have introduced a new methodology to calculate GDP. And again, when I say calculate GDP, we are talking about production method or output value method. What are the important things they have done? First thing, the base year has been changed. The base year has been changed. Earlier, the base year was 2004, 2005. Now the base year is 2011 and 2012. Now, before you start asking, sir, what is a base year? Please read the statement that is written in front of the term base year. Please read it. It will be discussed in detail when I take up inflation. We need to discuss inflation. There is a concept called as a GDP deflator. Trust me when I say this, I'll promise I will discuss the idea of a base year when I take up GDP deflator concept. Because I can teach you now. I know what is a GDP deflator. I know what is inflation. But without knowing inflation, if I tell you, right, what is the concept of a base year, half of you will not understand it. That is the reason, have patience. We will discuss the base year as a concept when I complete inflation. Right, that is most probably tomorrow. Now, first point, the base year has been changed from 2004, 2005 to 2011 and 2012. As of now, take it as correct, move forward. Point number 2. Earlier, the coverage was taken from ASI. ASI stands for Annual Survey of Industries. Now, the coverage is taken from MCA 21. What is MCA 21? Ministry of Corporate Affairs 21. Now, many of you will ask me, sir, what is the meaning of the term coverage? Let me ask you a very simple question. Imagine you are the minister in the Ministry of Statistics. MOS stands for Ministry of Statistics here. You want to give what is the GDP value of India. You want to provide what is the GDP value of India. That is, you want to say what is the market price of all the final goods and services produced in India. Now tell me, is it possible for you to go to every company in India and collect the data? Start answering. Participate, it becomes easier. Is it possible for you to go to every company and keep on asking them, tell me how many final goods you have produced, how many services you have produced? Is it possible? Of course, no. Right? That is not possible. So what we need to do then? Right? What we need to do? We will have to have a system where companies will give us data, where companies will tell us how many final goods and services they have produced. And that is basically Ministry of Corporate Affairs 21 system. Any problem with this? The system that we have introduced, it is one of the e-governance initiatives of Government of India, wherein the companies which have been identified, they will have to report what is the value of goods and services they have produced. Earlier, what we used to do is, we used to conduct a survey. We used to have a survey, and the name of the survey is Annual Survey of Industries. But we have done away with the idea of an annual survey of industries. We do not use that to calculate GDP. Now what we have done is, we have introduced a new e-governance initiatives. For example, let's say there are 3 companies, A, B and C. We will tell all the 3 companies to produce the data, to submit the data of the goods and services that they have produced. Is the logic okay here? Companies itself will submit the data to the NSO. NSO will use this data to calculate what is the value of goods and services produced in India. Now, many of you are asking, sir, what is this 21? Right? Why the number 21 is written? The number 21 is written just to, right, again, I am going by the statement given by the minister when we introduced this system. The minister said, the system has been built in such a way that is, this new initiative has been prepared in such a way that whatever is the demand of the 21st century, whatever is the requirement of 21st century, will be able to collect all the data using this system. That is Ministry of Corporate Affairs 21, MCA. Right, so that is the first, second very important change that has been introduced. Third one, we have shifted from the concept of a cost price or a factor cost to the market price. We have shifted from the concept of a cost price used for the calculation to the market price, which will be used for the calculation of GDP. Now, what do you mean by the cost price or the factor cost to the market price here? Please have a look at it. Factor cost includes all the expenditures which are incurred by the manufacturer to produce a good. Now let me take you back to the last 2 classes. Same example. You want to manufacture the bottle. Do you remember 4 factors of production? Let me know. Do you remember the 4 factors of production or not? The expenditure incurred by the manufacturer is simply nothing but factor cost. Or, right, it is basically the cost price. Any difficulty in this? You will pay for labor, you will pay for raw materials, etc. Right, get the sum total of it, that is factor cost or the cost price. Earlier, I repeat, earlier, we used to use the factor cost to calculate GDP. But now what we have done, no, we are not going to use only factor cost to calculate GDP. We will use the factor cost, calculate what is the market price, use the market price to calculate GDP. I'll tell you what is the difference between a factor cost and market price. I'll explain, have patience. But the point is very simple here. Earlier, imagine you paid 10 rupees for land, 20 rupees, right? 10 rupees for land, 20 rupees for labor, 30 rupees for interest and 40 rupees for profit. What would be the cost price? 100 rupees. You will simply count 100 rupees or take 100 rupees to calculate GDP. But now we are not using only 100. We will adjust this 100, move to market price, use the market price to calculate GDP, gross domestic product. Now question is, sir, how do I move to market price? How do I calculate market price? Now there are 2 very important points here. One is the concept of subsidy. One is the idea of subsidy. Second one is the taxation. Again, when I say taxation here, indirect taxes. Now, many of you will ask me, sir, what do you mean by indirect taxes? Give me example, define it, have patience. I'll simply write taxation here. Indirect taxes, we'll have a detailed discussion. You should have patience with that. Now, let's start. Imagine you are manufacturing this bottle. I'll take the same numbers. Don't get confused. Keep it simple. You will purchase raw material. You will pay 10 rupees. You will pay labor wages 20 rupees. You will purchase a machine, pay the interest of 30, and you want to earn a profit of 40. What will be the cost price? Cost price will be 100. Cost price will be 100. Now you want to sell it in the market. Now, don't you think the moment you want to sell this in the market, government will impose the taxes on this? Let me know if you disagree. You want to sell this in the market. Government says, very good, produce, sell, but I will impose tax on it. Now, can I say whatever is the factor cost, taxes are addition. Above and over the factor cost, taxes will get added. So if the taxes will get added, what will happen to market price? Market price automatically will start increasing. Any problem? Let me know right now. Right, so taxes will be imposed. Sir, any example of this? Imagine you go to a restaurant. You will purchase food. Government has imposed a tax on this. So don't you think because the government is imposing a tax, the market price of the food would be higher? You go to, let's say, a movie, PVR, Inox, whatever it is, you'll go there, right? And the government will impose a tax on that. What will happen to ticket prices? Ticket price would be higher, right? So argument is simple. Taxes are imposed, again indirect taxes. As a result of this, market price will be higher. But in addition to taxation, there is one more component called as subsidy. What is this idea of a subsidy? I'll write the definition here. Subsidy is the assistance provided by the government. Subsidy is the assistance provided by the government. Provided by government. Now let me see how many of you are reading newspapers. How many of you read today's article regarding one of the initiatives of Government of India, that is FAME. Again, don't get diverted. I just want to check whether you're reading newspapers or not. How many of you read newspaper article regarding FAME initiative? Or let's say one more very important article, fertilizer subsidy today. This is where your current affairs is relevant. I hope you understand. What is subsidy? Subsidy is the assistance provided by the government. Right? Those who are saying, sir, I have not read, please read. And those who do not want to answer because you have not read, please read. So argument is simple here. What is a subsidy? Subsidy is the assistance provided by the government. Sir, what do you mean by assistance here? Imagine this is a fertilizer bag. It's not a bottle now. It's a fertilizer. Right? I'm a farmer. I will go to the market. I want to purchase this bag of fertilizer. Actual cost, I repeat, actual cost of this particular bag of fertilizer, let's say, is 1,000 rupees. In fact, it is much, much higher than this. Let's take a simple number. Actual cost of this bag is 1,000 rupees. But government says farmers are very poor. They will not be able to afford the 1,000 rupees. So what government will do? Government will tell the manufacturer, whenever you sell this bag of fertilizer, sell it, let's say, at 400 rupees. Sell it at 400 rupees. Now the manufacturer will simply ask the government, sir, if I sell it at 400, I'm going to incur a loss of 600 rupees. Government says, please don't worry. I will give you that 600 rupees. Government is giving 600 rupees to the manufacturer so that the manufacturer will sell it at a lower price to the farmer. Now, let me ask you a very simple question. Will the subsidy help in reducing the market prices or increasing the market prices? I hope you understand. I've given a very simple example, by the way. Will the subsidy reduce the market prices or increase the market prices? It will help in reducing the market prices. Can I write it like this? Can I write it like this? Let me know. Factor cost plus taxation minus subsidies is equal to market prices. In fact, there was one more newspaper article today, FAME 2 initiative. If you have purchased an electric vehicle, either two-wheeler, three-wheeler, etc., the actual cost of the electric vehicle is very high in India. And I've told you yesterday one of the reasons why it is very high. Government of India would provide some amount of money to the manufacturer. I'll repeat it. Government under the FAME initiative will provide some amount of subsidy to the manufacturer so that you will be purchasing the electric vehicle at lower cost. Again, the logic is very simple here. Subsidies provided by the government will reduce the prices. Whereas the taxes imposed by the government will increase the prices. Now, is the formula okay with all of you? Instead of 100 rupee, I will write a factor cost. Instead of 100 rupee, I'll write factor cost. Factor cost plus taxes minus subsidies is equal to market prices. Anybody has a problem with the formula? Let me know right now. Earlier, we used to simply calculate GDP using factor cost. Now we are using market prices to calculate GDP. Why? What is the reason? Why did we shift like this? There is an international system. We have an international system. The system's name is Systems of National Accounts, SNA. Systems of National Accounts. This SNA as a concept was introduced by United Nations. SNA as a concept was introduced by United Nations. And most of the countries are using the same system where they are calculating GDP using market prices. Now we as a country, post 2014, we have adopted a system where we are also calculating GDP using market prices. Right? So that is basically the idea of shifting from the factor cost to the market prices. So first, base year has been changed. I have not discussed. I will discuss this later. Second one is, how do we collect production data? How do we collect the production data? The system has been changed there as well. Third one is, earlier we used to calculate GDP using the factor cost or the cost prices. Now we simply use market price to calculate GDP. For example, when you read the newspaper, they'll simply say GDP of India is $3.5 trillion. I hope you understand. GDP is $3.5 trillion. And when they say GDP is $3.5 trillion, is it calculated at a factor cost or a market cost? I hope you understand this. If you read the newspaper, GDP of India is $3.5 trillion. Right? Is it at a market price or a factor cost? By default, remember this, right? By default, understand it is at market cost. Okay, it is at market prices. Now, the next important change, we are using a methodology called as gross value addition. Gross value addition, GVA, gross value addition. Now, many of you will ask me, sir, what is this idea of a gross value addition? Let me start with a very simple example. If you remember, I told you that we are collecting the data from producers. Right? Do you remember that? I said we have a system called as MCI 21 where producers, manufacturers, service providers will submit how much goods and services they have produced. But there is one challenge there. Understand the challenge here. There is one challenge. If company A says they have produced goods worth 100 crore rupees, and company B also says they have produced goods worth 200 crore rupees. If I take the sum total of both of it, it will give me value of 300 crore. Right? I'll get a value of 300 crore. But don't you think if A will supply all the goods that they've produced to company B, then the GDP should not be 300 crore. Rather, it should be only 200 crore. Any confusion here? If A is submitting a data, right? A tells you, sir, this is our production. B also tells you this is our production. If you take production data from A as well as B, get the sum total of it. Can you say that is GDP? You will be wrong. Why? What if A has supplied to B? Then whatever is the production of A, it is intermediary good. Whatever has been produced by A, it is an intermediary good. And do we count intermediary good in the calculation of GDP? No, you should not count it. You should count only final goods. That is where the concept of gross value addition becomes very, very pertinent. Please look at the picture here. I have given the same thing that I have explained right now in a picture. There is step 1. Let's say there is a mining company. This company will mine out iron ore. Now this company A will sell the iron ore to another company B, who will use the ore to manufacture steel. And now this company B will sell it to C, who will use the steel to manufacture utensils. It could be a plate, it could be, right, let's say a glass, etc. And you will purchase these utensils in the market. Now A will submit the data to NSO, B will submit the data, C will also submit the data. Should we count all of them together? Should we simply calculate the sum total of all of them? If you do that, you are wrong. You are basically double counting, triple counting, etc. That is the reason we have introduced the concept of gross value addition. Now, how it is done? Right? How is the gross value addition calculated? I'll give you an example. Please understand this. Should you by heart this example calculation? Not at all needed. Please do not by heart it. I just want to show how gross value addition is calculated. And the term gross means total. Do not keep on asking why it is called as gross. Gross always means total. Let's start. Here is a company A has manufactured or has mined out iron ore and sold it to company B. Now, right, the company B will use this, produce a steel and sell it to utensil manufacturer. And C will sell it to, let's say, a buyer or customer. So A will produce a good, sell it to B at what price? A will sell it at 10 rupees. Now, is the logic okay? If I say A has contributed 10 rupees worth of production to the economy. I'll repeat the statement. A has, right, basically used a certain machine, has mined out ore, right? Do you remember chemistry classes? Iron ore, hematite, magnetite, etc. So they have mined out ore. They will sell it at 10 rupees to company B. So how much is the value addition done by company A to the economy? A has manufactured, contributed 10 rupees worth. Now imagine I'm A. I will sell it at 10 rupees to you. So what is the cost of raw material for you? Cost of raw material is 10 rupee. Now you will use it, manufacture steel, sell it at 30 rupees to company C. So when you manufacture at 30 and sell it at 30, how much is the value addition you are doing to the economy? You are adding 20 rupees worth of production to the economy. Third and final step, the company C will purchase it at 30 rupees, manufacture, let's say, a glass, sell it in the market at 50 rupees. So what is the value addition done by company C to the market or economy? 20 rupees. Now I hope you understand. You should not take the final value just like that. I hope you understand this. Right? Some of you will simply say, right, sir, I will take the final value directly. My dear, if you take the final value directly, how will you understand whether it is an intermediary good or a final good? I repeat, if you take the final value directly, how will you understand whether this is an intermediate good or a final good? That is the reason, whatever is the raw material which is consumed at every step, deduct the value of it. What is the value of addition done to the market? You will get it. Is it okay? In this industry, whatever is the output, the value addition done will be 50 rupees. I'll repeat it. In this industry, whatever value addition has been done is right 50 rupees. Right? Basically, you're taking the price at which it has been sold and you're subtracting value of raw material. For example, and many of you are saying, sir, I can't understand. It's a very simple calculation, by the way. Imagine you want to manufacture this bottle. You will purchase raw materials and you will manufacture the bottle and sell it to somebody else, let's say a storekeeper or another company who will use the bottle to manufacture something else. My argument is, when you want to manufacture the bottle, you will purchase raw material. I hope you understand. It is raw material. Can you simply count the value of the bottle, right, twice here? If you count the value of the bottle, right, basically you're doing double counting. Like yesterday I told you, if you count the value of the cement plus value of the house, double counting. Is the logic okay? If you count the value of the steel, value of the bottle, it is double counting. That is exactly what I'm explaining here. Right? Please revise. If you do not revise, you'll find everything is difficult. Right? Yesterday we have discussed this. Intermediary good, final good. Now you tell me, hematite ore. Now you will focus on hematite. What is hematite? Not required. Hematite ore, is it a final good or intermediary good? Think of it. The ore that is produced, right, by the miner, is it a final good or an intermediary good? It's an intermediary good. Should you count it when a company will submit the data to you? You should not count it. That is what I am doing here. Right? Let's say steel is produced, sold by the company. They will come to you and say, I've sold so much amount of steel. Should you count the value of the steel in the calculation of GDP? No. You will have to account it as an intermediary good. That is what the calculation I'm showing here. So at every step, we are calculating what is the value addition by subtracting value of intermediary good. Okay. So total value addition done here will be worth 50 rupees. Now let me know if we have done this for steel sector, can we do this same for aluminium? I hope you understand. Can we do the same for aluminium? Yes. Can we do the same thing for, let's say, all the other industries in India? Ship manufacturing, aeroplane manufacturing, car manufacturing, right? Of course, yes. Apply the same logic for every industry, for every sector, we can do it. Get the sum total of all of it, you will get gross value addition, right? Gross value addition. Now, there's a very interesting question. Why shouldn't we simply ignore company producing intermediate good? My dear, you tell me. You will manufacture a tire. Same, right? Despite discussing all of this, you will ask the question. You are manufacturing a tire. Is a tire final good or intermediate good? Think of it. Right? You try to make it very, very easy, sir. Right? What calculation you're showing? I have got answer to all of this. Simply count, right? Final good. I'm giving you an example. Tire. Milk. Tell me, is a milk a final good? Is a tire final good? If you say final good, you are wrong. If you say always intermediate good, you are wrong. It all depends to whom you are selling. I hope you understand. It all depends to whom you are selling the product to. That is the reason you try to make it very simple. But trust me when I say this, it's not that simple. All you need to understand, right, for UPSC examination is the basic concepts related to this. Okay. So this is one more very important change. We have introduced the concept of gross value addition. Okay. Gross value addition. So what are the important changes that we have done to the new system? Right. One, base year has been changed. I'll discuss that later. Second, right, the MCA database is used now. Third one, right, we have started using the market price to calculate GDP. And the fourth very important point is, right, we are calculating gross value addition. But again, I'll complicate it a bit more. Is it just sufficient? Absolutely no. Right? Just now we have started. Yesterday you were asking, no, how taxation will be counted, etc., etc. This is how. Let me complicate it a bit more. If you remember earlier, I told you a concept of subsidies. Right? There is a concept of subsidies. I told you subsidies should be counted. Counted means when you calculate GDP, you will have to account for subsidies. And I also said taxation must also be accounted for. Indirect taxation must also be accounted for. But please understand, the new methodology divides the subsidies into two parts: production and product. Production and product. I'll explain, have patience, listen to the lecture. Subsidies are divided into two parts: production subsidies and product subsidies. And taxation has been divided into two parts: production taxation or production tax and product tax. Let me start here. Whenever you come across the term product tax, product subsidies, it is always associated with quantity. It is always associated with quantity. Remember this. It is always associated with the quantity, that is number of units. Whereas if you use the term production tax, production subsidies, it is independent. It is independent of volume of production. It is independent of volume of production. Now let me ask you a very simple question. Focus on what I've written and let me know the answer to all of this. You are a manufacturer. You will manufacture one bottle and government says, for every one bottle, I will give you a subsidy of 3 rupees. I'll repeat it. For every bottle that you manufacture, I will give you a subsidy of 3 rupees. Now tell me, is it a product subsidy or a production subsidy? I'll repeat it again. Some of you are giving a wrong answer. Please look at what I've written at least. Right? For every bottle that you produce, government will give you 3 rupees subsidy. Production or product? It is a product subsidy. Anybody has a problem with this? Let me know. Some of you are saying production. Can you read English? I'll have to change the language now. Can you read English? If you can read English, please see what I've written below product. What have I written under the product? This amount, either taxes or subsidy, it is associated with quantity, number of units, volume of production. I am saying, if you manufacture one bottle, I will give you 3 rupees subsidy. So this subsidy, is it not associated with the quantity? Basic idea. Is it not associated? Of course, yes. Right? If you produce 1, you will get 3. If you produce 2, you will get 6. If you produce 100, you will get 300. Now on the other side, I'll give you one more example. You will come to the government and say, sir, I want to set up a manufacturing facility which will produce bottle. Right? You are telling the government, I will set up a manufacturing facility which will produce bottle. Government says, okay, you want to set up a manufacturing facility. I will give you, right, let's say 1 lakh rupees. Right? You want to set up a manufacturing facility. I will give you 1 lakh rupees. Now, think of this. Please look at the table and tell me, is it a production subsidy or a product subsidy? Production subsidy or a product subsidy? It is a production subsidy. Anybody has a problem? Let me know right now. Production, I'm talking about subsidy here. Production subsidies are provided by the government. Subsidies, of course, are provided by the government. So production subsidies are provided by the government, are independent, right? Are independent of volume of production. Whereas, right, the product subsidy, right? The product subsidy that are provided by the government are always connected with volume, right? Volume or the quantity of goods or services produced. Come to the other side, taxation. Same example. Taxation. You have produced this good, you want to sell it in the market. Government of India says for every one bottle, tax will be 10 rupee. I'll repeat the statement. For every one bottle, tax will be 10 rupee. Now tell me, product or production? Is it a product tax or a production tax? It is a product tax. Is the logic okay? Product tax. Let me give you one more example for production tax here. You want to set up a manufacturing facility, so you will purchase land, right? So you want to set up a manufacturing facility, you will purchase a land. And when you purchase a land, I hope you know this, you will have to pay stamp duty. Have you heard of this? You will have to pay stamp duty, taxes, stamp duty. Right? That is, when you purchase a land, you will have to pay certain taxes to government. Now, let's say you will purchase 2 hectares of land. You want to set up a manufacturing facility. You will pay 20 lakh rupees stamp duty to the government. Is it a production tax or a product tax? I'll repeat. Is it a production tax or a product tax? It is a production tax. Anybody? I don't want to take the names, but those who are asking product tax, tell me why. Right? 3 of you are saying product tax. My dear, you will purchase 2 hectares of land. Right? Government is imposing 10 lakh rupees tax from you and collecting. It is connected to quantity. I hope you understand. Is it connected to quantity of bottles that you are manufacturing? Again, Baba, focus on quantity of bottle. Right? 2 of you are saying, but you said 2 hectares. Right? That is quantity. Not focused on land. Focus on the product that you are manufacturing. Some of you are focused on the 2 hectares that I said. Don't focus on the land. That is not the product here. Bottle is the product. Bottle is the product. Right? So the 10 lakh rupees that you're paying to the government, is it dependent on how many bottles you're manufacturing? Answer is no. Right? So again, understand the logic here. Product tax are dependent on the quantity of goods you're producing. Production tax or production subsidies are independent of quantity of goods that you're producing. Now, final question regarding this to all of you. If you want to manufacture this bottle, will you account for all these taxes and subsidies or not? I'll repeat it again. If you want to manufacture this bottle and sell it in the market to me, the market price, let's say you have decided market price is 150. You have decided market price of the bottle is 150, right? When you sell it to a buyer in the market, will you count all these taxes plus subsidies or not? Your answer should be yes. If any of you say, sir, I will not count this, right? I will not count it. I will not count this factor, etc. My advice to you, do not enter into business. You're not a very good businessman. You will incur losses. Please do not enter. You should count all the taxes that you have paid. You should also consider all the subsidies that you have received and then decide what is the market price. Only then you can decide what is the market price. Now, let me ask you a very simple question. Finally, you want to arrive at a market price. All of you will agree with me, right? You want to arrive at a market price. Now, tell me, what will be your starting point? You want to arrive at a market price. You want to calculate GDP. You want to arrive at a market price. What is going to be your starting point for calculation? Right? Let me know. What will be your starting point? I'll write it. Let me know if you disagree with me. Factor cost. You will have to start from factor cost. Anybody has a problem with this? Anybody has a problem so far? Right? Again, let me, before going to the calculation, let me ask you a very simple question. Anybody has a problem with whatever I've discussed so far regarding GDP methodology? Let me know right now. Okay, everything is, repeat SNA, systems of national accounts. Systems of national accounts. It is a system which has been introduced by United Nations. It's been more than 2.5 decades now. We are using this methodology to calculate GDP. And that methodology says, do not use the factor cost, rather use market prices. Many other countries are using it. We have started using it post 2014 in India. Product taxes, production taxes, I'll repeat it again. Product means either a tax or a subsidy. Don't worry. Product. If you write the term product, in fact, I've written all of it. Please have a look at it later. If you use the term product, it is associated, it is dependent on quantity of goods, volume of goods. And production means it is not dependent on the quantity, it is independent of the quantity of the goods you have produced. Goods that you have produced. Done? That is a basic idea of a production and product. Production taxes, production subsidies. Product taxes, product subsidies. Okay? Right. So, anything else? What is the need for GVA? Gross value addition. If you will not calculate GVA, imagine 3 companies are submitting data to you. If you get the sum total of all the 3, right, all the 3, then basically what you will get is a double counting, triple counting, etc. And that is the precise reason what we do is we will adjust for intermediary goods so that there is no double counting. Okay, done. So some of you are saying, sir, table is very difficult. Leave the table. UPSC will never ask you that table. I hope you understand. UPSC will never ask you for that calculation of the table. And any book that you refer to, A, B, C, D, Z for UPSC, GS paper 3, none of them will give you this calculation. Right? Don't worry. Right? If that table is very difficult for you to understand, my recommendation, leave the table. That calculation is not required. Okay? Now, let's start. Factor cost. Concept of factor cost. We will have to start from factor cost. Right? Anybody disagrees, let me know. You want to arrive at a market price. So the starting point for you will be factor cost. Why? Because in the factor cost, you will count what is the cost of labor, what is the cost of technology, what is the cost of raw material, how much profit you want to earn. Everything is counted as a part of factor cost. Once you take the factor cost, what we do is, please understand the calculation very carefully. To the factor cost, first we will add production tax. First we will add production tax. And then we will subtract production subsidies. First we will add production tax, then we will subtract production subsidies. And when you adjust for the factor cost with production tax and production subsidies, what you will get is, it is called as basic prices. It is called as basic prices. Any difficulty in this? Any difficulty? It is not a market price. This is not a market price, right? This is a basic price. Now you'll ask me, sir, what is basic price then? Basic price, understand the definition here. I'll go with the document published by NSO. They say that basic price is that price which is the bare minimum that the manufacturer wants to cover for or wants to earn when they sell the product in the market. It is the bare minimum, the lowest amount that they want to earn. And some of you are saying, sir, you have got forgotten profit. My dear, please understand, I have not forgotten profit here. Profit is already a part of factor cost. Right? This is a third day that we're discussing the concept of factor cost. You should know it by now. Profit is already a part of factor cost. So what you will do is you will start with the factor cost. You will add production tax. adjust for production subsidies, you will get basic price. And please understand the next point. Basic price is not market prices. We will have to move again from the basic price to market price. What we will do now? You will start from basic prices. You will start from basic price. What is left out? You are left out with a product tax. You are left out with a product tax and product subsidies. Product subsidies. Right? You are left out with two more types, or expenditures and subsidies. One is a product tax and the other one is product subsidies. What you will get now is market prices. What you will get is market prices. Now, some of you are asking, sir, what is this the basic price? Here is the definition given by NSO. I hope you understand. This is the definition given by NSO. Please look at the definition here. Basic price is the amount. It is the amount receivable by the producer from the purchaser. This is very important. From the purchaser. Purchaser means what? Buyer in the market. For a unit of good or a service produced as an output minus any tax payable plus any subsidy receivable. I'll repeat the statement here. This is the definition. Many of you keep on asking, simplify. Give me the definition. What does NSO say? This is what NSO says. Now see, it is the amount receivable by the producer from the purchaser. And when I say purchaser here, it is a buyer, consumer who is going to purchase this product in the market. Buyer for a unit of good or a service produced as an output minus any tax payable plus any subsidy receivable. This is, my dear, the definition of basic prices. You can check it anywhere. I know many of you will be searching on the Google side by side, etc. I know that. Right? This is the definition given by National Statistical Office. Now, right, before going forward, many of you will basically point out, and you are doing right now. Sir, you have written minus any tax payable. But in the previous slide, you wrote a plus a tax payable. Then you are wrong. Please understand this carefully. Right? You are able to, right? You're not able to understand it because you're not looking at the definition carefully here. What is the definition? Basic price is the amount receivable by the producer from the buyer whenever a unit of good or a service is produced as an output minus any tax payable plus any subsidy receivable. Now tell me, here is the market price. Think of it. Here is the market price, which is, let's say, 40 rupees. From 40 rupees, you want to derive what is the basic price. This is a price paid by the buyer. Anybody has a problem? Let me know. This market price is the price paid by the buyer. So from this 40 rupees, you want to get the basic prices. How will you get it? How will you derive from 40 rupees the basic price? You will have to basically deduct the taxes, product taxes that have been paid, and you will have to add subsidies that the manufacturer has received. Again, product taxes, product subsidies, only then you will get the basic prices. Any difficulty in getting this? Let me know right now. Any difficulty? If you are finding it difficult, what I have done is very simple. This is the basic price plus product tax minus product subsidies is equal to market price. Right? Go back to your high school. Take both of them, transfer it on the other side. Transfer it on the other side. You will get basic prices is equal to market price minus product taxes plus product subsidies. Exactly the definition given by NSO. Right? Exactly what is the definition given by NSO, National Statistical Office. Then this is how the GDP at market prices. Many of you are asking me yesterday how taxes are adjusted. Now let me know. Is there any difficulty in understanding how do we use the taxation given by the government or imposed by the government to arrive at market price? Is the logic okay here? Subsidy should be minus. Arey Baba, you have shifted to the other side. You have shifted to the other side. That's the reason it is plus subsidy. Right? So please use your basic CSAT knowledge. You'll understand it. Okay? Any difficulty? Now, this is your time to ask me a question. What is factor cost? Factor cost is the total expenditure incurred by the company on 4 factors of production. Okay? That is basically the factor cost. But we have already used production tax and subsidy for factor cost. Why again adding to basic prices? We have used production tax, production subsidies in order to arrive at basic prices. In this formula, I'm not using production taxes. I'm using product taxes and product subsidies. Right? Is base price and factor cost same thing? Look at the slide and tell me, are they both one and the same? This is what basically surprises me. Right? This is what is surprising to me. I've used a factor cost to arrive at basic prices. And the question is factor cost and basic prices one and the same? If both are one and the same, why would I do so much of circus using all of these terminologies? No, my dear. Right? No, both are not one and the same. Factor cost basically considers how much expenditure you have incurred on 4 factors of production. But when you count, let's say, the cost of raw materials, labor cost, capital cost, etc., you have not counted production taxes. Is the logic okay? The formula is there right in front of you. You have not counted production taxes and production subsidies. That is where the government says count both of them and you will arrive at basic prices. Okay, that is a basic idea to arrive at basic prices. Okay, again, sir, use numbers, etc. Not necessary. Why do you want to complicate everything? Not at all required for UPSC. Don't focus on unnecessary things. Do not become a PhD scholar in this. Understand the formula, go forward. That should be more than sufficient. Okay. Now, let me ask you a very simple question. Let me ask you a very, very simple question here. I've written a formula: factor cost plus production tax, production subsidies, basic prices, again product taxes, product subsidies, etc. Now, let me ask you a very simple question. Should we calculate it just like this for every company, get the sum total of all of it, or should we use GVA? Think of this and answer to me now. I've written factor cost, right? Let's say, right, this is a simple example. Imagine there is one company A, another company B, another company C. All the 3 companies have given you the data. Should you take the data from all of them, start calculating GDP, or you should ensure that A to B, B to C? If this is a supply chain, whatever factor cost you will consider at gross value addition or not. Is the logic okay now? Because I'll write the formula. You should not ask me, sir, why are you writing GVA here? Please look at the formula here. The bottom part of the slide, please look at the formula and tell me, is the formula correct? Are you okay with the formula? Or is there any problem with the formula? Right, GVA at basic prices is nothing but GVA at a factor cost plus production taxes minus production subsidies. Now, once you arrive at a GVA at basic prices, you will use GVA at basic prices, right? Then you will add product taxes minus product subsidies, right? Then basically you will get a GDP at market prices. Any difficulty? This is how GDP at market prices is calculated. Why government will give subsidy when they will add taxes? Let me ask you a very simple question. Should government give subsidies to everyone? Think of it. I'll repeat it again. Should government give subsidies to everyone? Your argument is, sir, why government is doing double right activity like this? Why this kind of a circus? First you give subsidy, then you impose tax. If you're going to impose a tax, then don't give subsidy only. First you give, then you take, right? What is the logic? My dear, answer is very simple, right? The government will not provide subsidies to everyone, right? Government will not impose taxes, same rate, same tax on everyone. So automatically from one point to another point, from one system or from one sector to another sector, it will vary. That is the reason taxes, wherever they are imposed, whatever is the taxes imposed, you'll have to count them. And whatever subsidies are given to whomsoever, they will have to be accounted for. Right? That is the basic idea. Okay, so this is how GDP, gross domestic product, GDP is calculated at market prices. Right? So I'll put everything in a nutshell now. I'll put everything in a nutshell. Please follow the discussion. Point number 1, base year has been changed. Base year has been changed. Earlier it was 4 and 5. Now it has been made 11 and 12. Again, I am repeating it. We have not discussed regarding base year. Tomorrow I'll discuss. Point number 2. How do we collect data, production data from the companies? That also has been changed. Earlier we used to get the data from annual survey of industries. Now we are using a new methodology, Ministry of Corporate Affairs 21. Third, using GVA, we are calculating GVA at factor cost. Then we are calculating GVA at market prices. Gross value addition at market prices, that is GDP at market prices, is calculated using GVA at factor cost. Next very important point. Earlier we used to calculate GDP at cost prices or factor cost. Now we are calculating GDP at market prices. Can I go to the next concept here? This is how GDP calculation is done. This is how the calculation of GDP is done. And trust me when I say this, same question, same concept, right? That is the calculation methodology. Question was asked by UPSC. Let me show it to you. Right, don't worry, I'll come back to this slide. Just give me a couple of minutes. I'll come back to this slide. Please have a look at the question here. Please have a look at the question. Explain the difference between the computing methodology of India's gross domestic product before 2015 and after 2015. 150 words. We discussed this methodology for 1 hour. Now, don't you think your challenge here is to restrict the explanation in 150 words? I'll repeat it. This was asked which year? Again, I do not understand why students are always focused on, sir, in which year it was asked? Where it was asked? Last year. But tell me, is it relevant? Simple question to all of you. Is it anywhere relevant for your preparation? Nowhere relevant. Right? So, argument is simple. This was asked last year, 150 words. And as far as I'm concerned, the challenge for the student was not to write an answer to this, but to write it in 150 words. Write it in 150 words. And there is a very interesting question here. Sir, how many marks? Right? And this is surprising. Why, I'll tell you. It simply means you don't even know what is the pattern of UPSC examination. This simply shows what is the pattern of UPSC examination. You are not even aware of it. My dear, 10 marker will have 150 word limit. 15 marker will have 250 word limit. At least please be aware of what is the pattern of UPSC examination. Of course, it is you people who are going to write the exam, not me. Please be aware of it. Okay. Now there is one more term here. IIP, Index of Industrial Production. Don't worry, I'll discuss that. I know there is one term, IIP. Have patience. Index of Industrial Production. You need to learn so many things. Only after that you will understand IIP. I'll discuss that, not now. Done. So this was the question that was asked previously by the UPSC. Please be aware of it. Now, let me go to the next point. What are some of the things that are excluded when you calculate GDP? First one is services that are provided by housewives. Right? Services which are provided, rendered by the housewives. Again, where? Within the house. Within the house. Any services that are provided by the people who are working within the house, the value of that will not be counted. Sir, what do you mean by that? All of you are listening to the lecture. Now, in any time, any moment of time, your mother will walk in with a packet of biscuit and a cup of tea or a coffee, whatever it is. Right? Because you have been listening to economy and you have already conveyed the message to your parents. Economy is the most toughest, very, very technical, right? Very difficult for me. Now they are concerned. You're listening to the lecture. Your mother will come with, let's say, a small packet of biscuit and, right, a cup of tea. Now tell me, how many of you will pay for that? Think of it and let me know. How many of you look at your mother, she will hand it over to you, you will take out your purse and hand over 50 rupees to her. Try it once and tell me what will be the experience tomorrow in the class. Right? Itna maregi, right? So many hits you will get, left, right, center, like this. So argument is simple. Again, don't write all of this in the exam. Right? Simple understanding. Whatever services are provided in the house, especially in case of a, let's say, economy such as India, societal structure such as India, the services that are provided, money is not paid. And because the money is not paid, you do not know what is the market price of it. And because there is no market price given to it, it will not be counted in the GDP calculation. Second one, black money. Second one is, counting black money is very, very difficult. Now you will ask me, sir, what is black money? Point number one, black money is unaccounted money. Unaccounted money. Right? Black money is unaccounted money. Now, what do you mean by unaccounted money? The government doesn't know what is the source of this money. The government doesn't know what is the source of this money. You do not disclose this to the government. Now tell me, if you have not disclosed the source to the government, will you pay taxes on this? Will you pay any tax on this? Of course no, tax will not be paid. Such amount or such money whose source is not disclosed and the taxes are not paid on it, it is called as black money. That is called as black money. Now let me ask you a very simple question. Please have a look at it. Imagine you are the Prime Minister. 6'5", I'm making you Prime Minister. And I'm one of the, right, a taxpayer in India. Tell me, do you know what is the source of this income? What is the source of this 100 rupee? Any idea for you? Can you tell me what is the source of this? Absolutely no. And point number two, right? Some of you will simply say, sir, right, this 100 rupee, right, you would have received from someone else. Where is the paper document for this? Where is the paper documentation? If there's a paper trail, you can easily find out whether this is white or black. So there is no way for you to find out whether this is white or black. And that is point number one. Now, if you do not know whether the money is, right, white, black, etc., first of all, you don't know how much cash is there with me, how much money I have. Will you be able to impose the right amount of tax and collect it from me? Absolutely no. I hope you understand. Absolutely no. That is the reason. That is the reason unaccounted money, which is black money, very difficult to count the value and add it to the system. Right? So black money will not be counted. Third one is the transfer payments. Right? Transfer payments. Now, what do you mean by transfer payments? Please remember the definition here. Transfer payments are basically one-sided transfers. One-sided transfers. Transfer payments are one-sided transfers. Now, you will ask me, sir, what do you mean by one-sided transfers? Let me start with an example. You will come to the shop. Imagine I'm the shopkeeper. You will purchase the bottle. You will pay the money to me. I'll repeat it. You will come to the shop. You will purchase the bottle, take over the bottle and give 100 rupee to me. Is it one-sided transfer? Think of it. Is it one-sided transfer? Absolutely no. There are two transfers which are happening here. I am transferring this bottle ownership to you. You are basically giving me money. But there are many transfers which take place in the economy which are one-sided. Only one from one side to another side, money will change, money will be transferred, but no good or service will be provided. For example, government will provide subsidies to individuals. Government will provide pensions, etc. Such type of transfers are called as transfer payments. Right? This is a transfer payment. Now, this transfer payment, because understand the logic here, the money is given and in return, no good or service is taken. I hope you understand this. Money is given, but on the other hand, no good or service is taken. So, can you count it as a part of GDP? No, that is not possible because no good or service is provided. Right? So, transfer payments are also not counted, right, when they are done in the calculation of GDP. Okay? Old goods which are resold, the goods which are resold, right, these values are also not counted. Have a look at this. Imagine, understand this carefully. Imagine you've purchased a car. You purchased a car in 2021. Now, tell me, when you purchased the car in 2021, was the value of the car counted in the GDP calculation or not? I will repeat the statement. You purchased a car in 2021. Was the value of the GDP counted in the calculation or not? Answer is yes, by the way. Now you will resell the car in 2023. I repeat, you will resell the car. Now tell me, if the value of the car is again counted this year, is it not double counting? I hope you understand. If the value of the car is counted again in this year's GDP, is it not double counting? Answer is yes. So that is the reason, right? That's the reason, right? The goods which are resold again and again, right, will not be counted in the value of GDP. Okay, right? So these are some of the things that are excluded in the calculation of GDP, right? Calculation of GDP. Done, right? So this is the discussion regarding GDP. Any difficulty? Can I go forward? Now, right, some of you keep on saying, sir, you do not answer to my question. I'm asking you now. Any question? Can I go forward now? NIA transfers will not be included. My dear, transfer payments are not included. Can you understand my statement? Transfer payments, because there is no good or a service. If you want to count something in the calculation of GDP, market price has to be there. It has to be either a good or a service. But in case of a transfer payment, only money is being given, no good or a service. How can you count it? Commission on resold vehicle. If there is a commission which has been generated, now tell me, right, there is a company, understand this carefully, which will be involved in reselling of used car. Reselling of used car, seconds. Reselling of used car. Now they will provide the services to you, such as, let's say, OLX. The services are generated in this year or not? Understand my statement here. Services are generated in this year or not? Don't worry about car. Focus on services. So when they provide the services to you, they will charge a certain commission. Should the commission be counted or not? Answer is yes again. Right? So that is the reason. Services are produced this year. So count the commission that has been generated. But the value of the car will not be counted because the value of the car has already been counted when it was sold once. Okay? Done. Let me go to the next point. Repeat the black money. Black money, understand this. Black money is that amount of money which is unaccounted, source of which is not known to the government, again to the government, not to you. If I have generated 100 rupee black money, I will know what is the source. So please understand the logic here. When I say the source of the money is not known, it is to the government. Government doesn't know what is the source of the money. And right, the tax on this is not imposed. And because the government doesn't know the source, tax is not imposed, etc., government will not be able to count it as a part of GDP. Okay, let's start. Next one is the concept of gross national product, GNP, gross national product. Now, what is this concept of a gross national product? Let me start with the basics here first. Whenever you talk about GDP, remember this. Whenever you talk about GDP, the production should be done in India. Any difficulty with this? In fact, yesterday I've discussed all of this. If something is exported from India, because it is produced in India, count it as a part of GDP. Something is imported into India, it was manufactured somewhere else outside India, because it was manufactured outside India, do not count it as a part of GDP. Now, can I say GDP calculation focuses on the territory? Any problem with this statement? GDP calculation focuses on the territory. Territory means what? Within India. Within India, whatever is produced, of course, final goods and services, we will count it as a part of India's GDP. Now, there is one more concept called as gross national product. GNP, gross national product. What is the definition of gross national product? It is the market price of all the goods and services which are produced by the nationals of a country within a financial year. Now, I'm using the term nationals. Many of the books, instead of nationals, will use the term residents. I'm using the term national. Many of the books, instead of nationals, will use the term residents of a country. Now, what do you mean by the term nationals? Let me give a very simple example. A foreign company, underline the term foreign company. A foreign company, imagine, will generate certain profits in India. Now you tell me, should we count this profits generated by a foreign company as part of India's GDP? GDP. I'm talking about GDP. Listen to me carefully. A foreign company has generated profits in India. Should we count it as part of India's GDP, gross domestic product? In GDP, yes. In GDP, again, some of you are saying no even after this. In GDP, yes. Should we count the profits of the foreign company in GNP? Gross national product. Right? No. In case of GNP, we will not count it. Why? Please look at the term here. It's a foreign company. It's a foreign company. It's not an Indian company. It's a foreign company. So whenever you talk about gross national product, you should focus on nationals of a country. For example, I'll take one more example here. Imagine you're a software engineer who is working for TCS. Right? TCS company. Now you'll be sent to America for 3 months. You'll be sent to America for a period of 3 months. You will earn a salary. Point number one, follow this carefully. Point number one, you have earned a salary. But tell me, will this salary be counted as part of India's GDP? I'll repeat it again. The salary that you have earned when you are there in the USA, you are there in USA, you have earned a salary. Will it be counted as a part of GDP? Answer is no. Most of you have said no, but some of you are saying yes again. It should not be counted, my dear. Right? It should not be counted. If you ask me why, it should be very clear to you by now. Right? GDP means what? Production of goods and services should be done in India. But I am saying you are sitting in USA. How can you count what your salary is in USA as a part of India's GDP? You should not count it. Right? Even is there any problem even now? Let me know. It should be very clear to you. Why? I wrote GDP, produced in India, territory concept, but even then, sir, why? If I'm earning a salary in USA, I'm an Indian citizen. It should be counted in India's GDP. But you are producing the goods and services in USA. Because you're producing in USA, why should we consider it in India? Absolutely no. But now tell me, you are an Indian citizen. For 3 months you are there in the USA. Should it be counted as a part of India's GNP or not? Should it be counted as a part of India's GNP, gross national product, or not? Yes. It should be counted as a part of India's GNP, but not as a part of India's GDP. Gross domestic product, no. Gross national product, yes. Any problem with this? Let me know. Any problem with this? Now, let me prove it again. These are certain examples, right? These are certain examples. Indian company, I'll write the numbers. If you have a doubt, raise the doubt using the number so that I understand what is your doubt actually. Look at the first example. Indian company is working in India. Indian company is working in India. Whatever profits are generated by this company, whatever profit is generated by this company will be counted as a part of GDP as well as GNP. Why? It is an Indian company. It is working in India. Second, Indian company is working abroad, outside India. Whatever profits generated by this company will not be counted as part of India's GDP, but will be counted as a part of India's GNP. Because it is no doubt it is working outside India, but it's an Indian company. It is an Indian company. Indian citizen is working abroad, let's say for 3 months, 6 months, 8 months, like this. Will the salary, right? Will the salary earned by this for the citizen will be counted as India's GDP? No. It will be counted as part of India's GNP. Foreign citizen who is working in India, whatever salary is earned by the foreign citizens working in India, right? It will be counted as part of GDP, but not counted as a part of GNP. Foreign company which is working in India, already proved. Whatever is the profits generated by the foreign company counted as a part of GDP, but not counted as a part of GNP. Any difficulty in any one of them? Any difficulty in any one of them? Second one, Indian company is working abroad. Again, my dear, I'll repeat it. You should not have a doubt. Please understand, you should not have a doubt. Why? GDP means what? It should be produced in India. GNP means it should be Indian. How difficult is it? Let me know. GDP means it should be produced in India. GNP means it should be Indian. Indian company working in India. Now tell me, is the production done in India? Of course, yes. Is the company Indian? Of course, yes. So will it not be counted as part of GDP as well as GNP? Right? Indian company working abroad, outside India. Is it an Indian company? Yes. Hence GNP. Is it producing in India? No, not part of GDP. Indian citizen working outside India. Indian, so GNP. Outside India, not GDP. Foreign citizen working in India, within India. Within India, hence yes. Not Indian, so no. Foreign company working in India, within India, yes. Not Indian, so no. Any problem with this? Any problem with this? What about those who have citizenship abroad? My dear, if you go to USA, become a USA citizen, tell me, are you an Indian now? You let me know what is your argument. Right? Your argument is, sir, I'm going to USA, I'm becoming a citizen of USA. The moment you become a citizen of USA, are you a citizen of India? Right? So think of it. Whenever you ask these kind of things, think of this first. Okay? Done. So this is a basic idea for GNP. So again, some of you are asking, what is the difference between GDP and GNP? GDP focuses on whatever production is done in India. GNP focuses on whatever is the production done by Indian nationals, whether they are there in India or outside India, doesn't matter. Whatever production is done by nationals will be counted as part of India's GNP. Okay. So how do we calculate GNP? Gross national product. GNP is equal to GDP plus NFIA. GDP plus NFIA. What is this NFIA? Net factor income from abroad. NFIA stands for net factor income from abroad. Now, point number one. What do you mean by the net? Please understand the term here. Gross means always total. Gross is always total. Net means from the total, certain adjustments, either addition, subtraction, whatever it is. From the gross, certain changes will be made. Can I give you a very classic example? Right? Let me know. Again, UPSC will not ask you all of this. Can I give a classic example? Once you become IAS officer, your gross salary, let's say, is 24 lakh rupees. Right? Imagine, I want all of you to become IAS officers, by the way. The government will give you an offer letter and say, your gross salary is 24 lakh rupees. And there also what some of you will do, you will take out your mobile, open the calculator app, 24 lakh divided by 12 months you will do. And the calculator says 2 lakh rupees per month. Now tell me, will you actually get 2 lakh rupees salary in your account? Think of it. Will you actually get 2 lakh rupees salary in your account? Absolutely no. If you say yes, sir, then you're wrong. Government will deduct certain taxes from you. Certain taxes will be withheld. Right? What about the contribution to Provident Fund? What about contribution to this, that, etc., etc.? So what you will get is a net salary. Done? What you will get is net salary. So is the logic okay now? Gross means total. But from the total, certain adjustment will be done to arrive at net. Right? That is the concept of gross and net. Now in this context, what do you mean by net? Point number one, please look at the term factor income here. Factor income. Now let me go back to the table here. Focus on point number 3 and focus on point number 4. I'll repeat it. Focus on point number 3, focus on point number 4. Now tell me, when you look at 3, you're an Indian citizen. You are earning salary in USA. Is it counted as a part of GDP? Is it counted as a part of GDP? No. But when I calculate GNP, it should be counted. All of you will agree? I want to calculate GNP. So should I count 3 or not? Of course, yes. Look at 4. Look at point number 4. Is it counted as a part of GDP or not? Answer is yes. Should I count it in GNP? Again, no. Now, let's say GDP of India is 100 crore rupees. I'll take simple numbers so that you understand it. Let's say GDP of India is 100 crore rupees. And let's say you have gone to USA for 6 months. You have earned a salary of 1 crore rupees. Now, is it okay if I simply add both of them and I'll write GNP? Is it correct? Let me know. Right? India's GDP is 100 crore. You have gone to USA and 6 months you have earned 1 crore rupees. I will add 1 crore rupees to the GDP number. Is it equivalent to GNP? Let me check what you have understood so far. Some of you are saying yes, you are wrong. This is wrong. This is wrong. It is not equal to GNP. Why? Within GDP, what about component 4? What about fourth one? Don't you think within 100 crore rupees, certain foreign citizens will be there in India who might be working for 3 months, 6 months, 8 months like this? Their salaries will be counted. So what I'll have to do? I will have to deduct it. Any problem with this? Please do let me know right now. I will have to deduct the salaries earned by the foreign citizens who are working in India. Now can I write like this here? 100 crore, which is a GDP, plus 1 crore rupees, the salary that you have earned as an Indian citizen outside India, minus, let's say, 80 lakh rupees foreign citizens salary in India. Now can I say this is GNP? Let me know. Now can I say this is moving towards GNP? Of course, yes, many more adjustments have to be done. I hope you understand. Many more adjustments have to be done. Why? Salary is one factor cost. Any problem with this? Let me know right now. Salary is one of the factor incomes or factor cost. In the same way, right, look at point number 2 and point number 5 now. Please have a look at this picture. That's the reason I've written point number 2, point number 3, etc. like this. Please look at the picture, point number 2 and point number 5. In point number 2, Indian company is working abroad. So I should be counting this while calculating GDP. So whatever profits are generated by, let's say, Tata company in USA, Tata company in UK, I should be counting that as a part of India's GNP. But I've not counted it so far. But on the other hand, when I calculated GDP, did I include the profits earned by foreign companies in India or not? I have included that. Can I make one more adjustments now? Is the logic okay? Can I make one more adjustment? That is, let's say, 100 crore rupees minus profits earned by foreign companies in India plus profits earned by Indian companies profits earned by Indian companies outside India. Any problem here? Can I go forward? Any problem? Let me know right now. This is the time for you to ask question regarding this. When I'm discussing, don't ask me. I should discuss. That's the reason. I am asking you, any problem here? Sir, can you explain it? I will tell you. Follow the basics first. Understand the basics first. GDP means whatever is produced in India. GNP means whatever is produced by nationals of India. Now, you are a software engineer. You have gone to USA. You are providing services where? In USA. So whatever salary you are earning sitting in USA, I will not count it as a part of India's GDP. But I will count it as a part of India's GNP. Why? You are a national. You are a citizen of India. So what I'm doing is, we already have GDP. We already have calculated GDP. Now from the GDP, I want to arrive at GNP, Gross National Product. How do I arrive? I will have to make adjustments. What kind of adjustments? From the GDP, I will subtract the profits earned by foreign companies. Whatever profits earned by foreign companies, I'll subtract. I will subtract, right, whatever rent that has been earned by foreign individuals owning assets in India. I will subtract whatever salaries have been earned by foreign citizens living in India. And to this, what I'll do? I will add profits earned by Indian companies but outside India. Let's say Tata company is earning profit in USA, I will add it. Tata company is earning profits in UK, I will add it. I will also add whatever rent that Indian citizens are earning outside India. Now, many of you ask me, sir, what is this rent? Let me ask you a very simple question. Can you own a piece of land? Being an Indian citizen, can you own a piece of, let's say, real estate in USA? I hope you understand my statement here. And if you're reading the newspapers, it will not be very difficult for you. Being a citizen of India, can you invest in the USA market? Answer is yes, by the way. Those who are thinking, no, sir, that will not be allowed. My dear, are you not reading in the newspaper where very rich people, not Aam Aadmi, very, very rich people will say, I have purchased, right, let's say a flat in America. I have purchased a very costly, right, let's say palace in Abu Dhabi. Have you not come across even this now? Then what are you watching? Right? Let me know what are you reading, what are you watching. Right? For example, last year, one of the sons of Mr. Mukesh Ambani purchased a very, very costly palace outside India. Right? I hope you understand. Right? So understand the logic here. Can you own assets outside India? Answer is yes. And when you have assets, you will earn rent on it. So I will add a rent. And right, whatever salaries Indian citizens are earning outside India, I will add it. And if I add, right, all of this, subtract all of this, what I will get is GNP. Any difficulty now? What I'll basically get is gross national product, meaning Indian nationals, whatever they have produced within India as well as outside India. That is gross national product. Any difficulty here? And please understand the difference between this. Please have a look at it. I'll put a different marker now. Can you see this box? Let me know. I'm using a different marker. Can you see this box? Right? Foreign salaries in India, Indian salaries outside India. Rent earned by foreigners in India, rent earned by Indians outside India. Salaries, right? Let's say profits earned by foreign companies in India, profits earned by Indian companies outside. This is called as net factor income. This is called as net factor income. Net factor income from abroad. Any problem? Let me know now. Any problem with this? Now, what is the use of GNP? Let me ask you a very simple question. Right? Let me ask you a very simple question. Which one do you think is a better qualitative data? Is it GDP or is it GNP? I'll repeat the question by the way. You have GDP, you have GNP also. Which one will give you better quality data? Underline the term quality here. Which one will give you a better quality of data? Right? You want to calculate or you want to find out how wealthy are Indians. You want to find out what is right the income level of Indians. How much assets are held by Indians? That should be focus for us, of course. So is it GDP or is it GNP? Answer is GNP. Please do not have any doubt regarding this. Answer is always a GNP. Right? Some of you will ask me, sir, how? How is that possible? I'll give you an extreme example. Don't buy hard this. I'll give you an extreme example. Right? Let's say there is a country. There is a country, and in this country, the GDP value is 100 crore rupees. GDP value is 100 crore rupees. Now, what if I say out of 100 crore rupees, 90 crore rupees is basically the contribution done by foreign companies? I hope you understand. What if I say, right, out of 100 crore rupees, contribution to the extent of 90% is done by, right, let's say foreign companies? Do you think this is a preferable situation for a country? Think of it. Do you think that's a preferable situation? No. But can you find out how much is the production done by the domestic companies under the concept of GNP or not? Think of the logic now. Right? Apply logic now. Right? GDP will give you the value of final goods and services. But can it tell you how much is the production done by nationals? How much of it is salary earned by Indian citizens? How much of it is the profit earned by Indian companies? Answer is no. But if you calculate GNP, that is purely how much Indians have earned. How much profits Indian companies have generated. So don't you think GNP is a better qualitative indicator compared to GDP? Right? That is a concept of GNP as well as GDP. Can I go to the next one here? Right? Just to prove the concept of net factor income from abroad, I've written net compensation for employees, right? Net income from investment done outside India, profits earned by Indian companies outside India. What I've written here in the table, I've written in the slide here. Okay. Any difficulty? Can I go to the next one now? Right? Can I go to the next one? At the end of the discussion, I will tell you, despite all of this, why we always focus on GDP. Have patience. I will tell you after some time. Let's start. Sir, where do we get the foreign countries data? For example, RBI. Please keep on reading newspapers, you will understand. RBI will publish all of this data. RBI knows how many dollars are coming into India, how many dollars are going out of India, etc., etc., etc. RBI will give all of this data. And government will also have this data. Please don't worry. Let's start. Net domestic product. NDP, net domestic product. Now, before I start discussion on net domestic product, let me ask you a very simple question. Follow the explanation carefully. If you understand the explanation, concept is clear, later also you can understand it very easily. Let's start. Imagine example 1. There are two examples here. Example 1, example 2. Imagine you're a manufacturer who is manufacturing this bottle. All of you will agree? You're a manufacturer who is manufacturing this bottle. You have two machines. You have two machines. Here also two machines. Here also two machines. Now, after 5 years, just like Hindi movies, after 5 years, out of, focus on example 1, out of two machines, you will throw away, you will basically remove one machine, purchase one more machine. I'll repeat it. After 5 years, out of two machines, I'll call them as A and B. Two machines A and B, you will simply throw away machine B and you will purchase one more machine C. Now come to the example 2, right? Same two machines A and B. You will not throw away the second machine. Now you will purchase one more machine. You will have three machines A, B and C. Now simple question to you people. Where do you think the production will be more? Example 1 or example 2? This is not difficult. It's a very basic question. Where do you think production will be more? Example 2 or example 1? All of you will agree example 2. Anybody has a question on this? Anybody who says, are you two people? Tell me how. Right. So again, I've not made any trick here. I've not given any hidden agenda, nothing else. I'm saying machines are there. In example 1, you will have two machines. In example 2, you will have three machines. Where do you think you will have more production? It has to be here. It has to be under example 2. Now, why? What is the reason I'm explaining the example 1 and example 2? Reason is simply this. Whenever you calculate GDP, can I say that some of the goods that you produce will be machines? Any problem with this? Whenever you calculate GDP, of course, yes, you will count the final goods and services. But some of the final goods and services will be machines or not. Anybody has a problem with this? Sir, what do you mean by machines? Have you seen the picture where companies are using machines to manufacture car? Companies are using machines to manufacture, let's say one more product. So when you calculate GDP, some of the final goods and services will be machines or not. Right? Of course, yes, some of them will be machines. And that is exactly what you're purchasing here. Right? That is, in simple term, capital. Right? Capital goods. Capital goods are nothing but machines which are used for production of other goods. Right? For example, right? Who do you think has made this bottle? Do you think a person is sitting to make this bottle? Of course, no. Machines are used to manufacture the bottle. Right? And those machines are manufactured by us. Or the tablet that you're using, mobile phone that you're using, the AC that is running in front of you right now, all of these are nothing but machines. Now think of this very carefully. When you talk about machines, these are produced every year. These are produced every year. What would you prefer? What would you prefer? A situation wherein you are replacing machines or a situation wherein you are adding to the existing machines? I'll repeat it again. Right? Imagine this year, GDP value is 100 crore rupees. I'll take a simple example, by the way. imagine this year you will get the GDP value 100 crore rupees. And I say out of 100 crore rupees, 10 crore rupees is the value of machines. Now, if these 10 crore rupees is the value of the machines, in which situation you want to be in? Example 1 or example 2? Your answer should be, sir, example 2 is a preferable situation in the economy rather than example 1. Why? Because understand the logic here. You will come to know in some time why I'm discussing all of it. Have patience. GDP is 100 crore. But tell me, will that GDP value tell you how much of these capital machines that you have produced this year, how many of these are for replacement? That is example 1. And how many of them are for addition to the existing capital? Will GDP value give you that? I hope you understand my question, by the way. Right? If you're not able to understand the question itself, let me know. GDP value will never tell you how many of these goods are for for replacement of the existing machines, and how many of these goods, right, will add to the existing capital. That information will not be provided in the GDP value. That is the precise reason we will calculate one more indicator, which is called as NDP, net domestic product. We'll calculate one more indicator, which is called as an NDP. Now, many of you will ask me, and you're asking, what is the use of it? Let me ask you a very simple question. Think of it and answer. Imagine there are two countries, A and B. Okay? Imagine there are two countries, A and B. The GDP of both the countries is 100 crore rupees. GDP of both of the countries is 100 crore rupees. In country A, out of this 100 crore rupees, 40 crore rupees is basically the capital machinery. All of it is being used for replacement. All this 40 crore rupees worth of machinery is being used, right, for replacement. And in the second example, they have also produced 40 crore worth of machinery. And all of this 40 crore rupees is for addition to the existing capital. I'm taking extreme examples so that you understand it quickly. Now tell me, in the future, assuming everything else is same. Sir, what about labor? What about technology? Assume everything else is same. Tell me, in which of the two countries do you think production will improve in the coming years? Is the logic okay with all of you? Right? I hope you understand why GNP. One person says A. How? Like, this is actually surprising to me. How do you say A is going to produce more goods? Right? Please let me know if you are still confused. In second country, 40 crore is addition to the existing capital. Meaning what? Whatever machines are there, they will continue to function. In addition to that, we will install more machines. But in the first country, we will remove some machines and we will add more machines or new machines. So you think in the first country, more production will happen? No, my dear. Second country, the production will happen more. Because in addition to the existing machine, we are adding more machines. So automatically, production has to increase. Any problem with this? Any problem with this? That's the reason NDP. Now, can I simply say that's the reason NDP is a better indicator compared to GDP. Is the logic okay? I'll repeat it again. Right? NDP, GDP. We have two indicators. NDP is calculated using GDP, but I'm saying NDP is a better indicator compared to GDP, because GDP will not tell you how much of the total goods are used for replacement. Right? How much is the addition to the capital? How much is right, the replacement of the capital? That value will not get using GDP. But in case of NDP, you can get all that information. Now let me know, is it okay if I say the best possible scenario? The best possible scenario will be that, right? Again, by the way, I'll come back to this question. Let me give you the formula first. How do I calculate NDP? NDP is equal to GDP minus depreciation. Okay, GDP minus depreciation. Now you will ask me, right, what is this idea for depreciation? Now I know some of you, based on your question, I know, right, you're from commerce background. Do not worry about commerce explanation here. Focus on UPSC requirement. Depreciation simply means how much money you will spend to replace. I'll repeat, how much money you will spend to replace existing capital. I'll repeat it again. Depreciation simply means how much expenditure you are going to incur to replace existing capital. Sir, what do you mean by capital? Imagine you will start a company. Understand this example here. Imagine you will start a company. You will purchase a machine. Now, is it okay if I say after 10 years, the machine has become very old. It is not producing sufficient goods and services, right? It is breaking down very often, right? The maintenance and repairs are very high. What you will do? You will simply throw away this machine. Throw away means replace this machine with a new machine. Yes or no? You will simply, right, give away this machine and you will replace with a new machine. So what is the expenditure you have incurred? That is called as depreciation. Right? Whatever is the expenditure that you have incurred to replace a machine, replace old capital, that is called as depreciation. Now I know some of you from the commerce background, you'll say, no, sir, depreciation is done this way. There are two methods, etc., etc. Don't worry about that. Focus on the UPSC requirement. For GS paper, you do not have to become a PhD scholar on depreciation. Just keep it very simple. Now, whatever is the expenditure that you have incurred to replace a machine, that is called as depreciation. Any problem with this? Can I go to the next point? Can I go to the next point here? This is basically how NDP is calculated using depreciation. Now, right, look at the next point here. Look at the next point. Imagine there is a country where, right, 40 crore rupees. I'll go back to the same number that I've used earlier. GDP value is 100 crore. 40 crore rupee worth of machines are produced out of this GDP, and all this 40 crore is used for replacement. All this 40 crore rupees is used for replacement. And in the second example, 100 crore rupee, out of that 40 crore rupee worth of machines, all of them are addition. All of them are addition to the existing capital. None of the machines are replaced. Now, can I say NDP in the example 1? I repeat, NDP in the example 1 will be 60 crore rupees and NDP in the example 2 will be 100 crore rupees. Any difficulty here? Example 1, NDP will be 60 crore rupees and example 2, NDP will be 100 crore rupees. Any problem here? Now tell me, don't you think a second situation is always preferable compared to first example? I repeat, second example is much better compared to first example. Why? In the second example, there are machines. To this machine, you're adding more machines, which means your production is going to increase. But in case of, right, in case of the first example, some of the machines are getting replaced with the new machine, which means production compared to the second example will be lower. Any problem here? Any problem? That's the reason, please remember this, right? Generally, they will say difference between NDP and GDP. I repeat, difference between NDP and GDP should be narrow. I'll repeat the statement. Difference between NDP and GDP should be narrow. If it is narrow, it is considered good for the economy. Can I simply say this? Any problem with this? I'll repeat it. After this, we'll take break. Focus on this. Right? The narrower the difference between NDP and GDP, right, better it is for the economy. Which means, how? Arey Baba, understand the logic, no? After all of this also, if you keep on asking how, why, etc., it means you're not even understanding the calculations. In example 1, you are replacing the capital. In example 2, you are adding to the capital, which means in the second example, right? Or let's say I've taken country A, country B. In the second example, you are adding more machines, which means there is no gap between GDP and NDP. I hope you understand. Right? In the second country, that is B, in this example, there is no gap between GDP and NDP. Means whatever you have produced, those machines will keep on adding more and more production to the economy. That's the reason I said narrower the gap between GDP and NDP, right? That is preferable for the economy. Books will not give you this. Understand this carefully. Concepts are important. I'm pretty sure all of you have received, or all of you have one or the other book. Many of you will have 4 or 5 books. You can read it. They will not discuss all of it. UPSC will check you in this only. Because this is a basic idea. You will produce goods. Some of them are machines. Now these machines, are they being used for replacement of the capital, or are they being used for addition to the capital? If it is addition to the capital, it is always preferable than replacement of all the capital, right? Because if you replace, then you will not have, right, more production compared to the second situation. Okay, right? So that is a basic idea. Now some are saying, sir, it should be 140. My dear, please look at the formula. Please look at the formula, right? Please look at the formula. You are not even looking at the formula. What is the formula? NDP is equal to GDP minus depreciation. Now I said depreciation means what? You are replacing the capital. And I said in the second example, whatever goods you have produced, it is addition to the capital, that is capital goods, of course. It is not replacement. Means depreciation in the second example will be how much? Right? Again, I know I'm taking extreme example. Depreciation in the second example will be how much? 0 rupees. So GDP is 100 crores, depreciation is 0 crores. NDP will be 100 crores, which is preferable, right? But again, it will not happen because, right, whatever final goods and services you produce, some of the machines will be used for replacement of the machines. Some of them will be used for replacement. Okay, done. So this is the discussion regarding NDP. Now please understand, we have discussed GDP, but we have already decided, we have concluded NDP is better than GDP. Second, we have also discussed GNP, and we have concluded, right, the GNP is better than the GDP. Remember this, okay? Done. So let me take a break now. But before that, the questions that you have, please, right, let me know the questions so that I can answer. What about online earnings who work from foreign companies? You tell me in which foreign company are you talking about? Tell me the example. Where you're sitting in India, you're working for a foreign company. Where is the salary paid? Is it paid in the American bank or is it paid in the Indian bank? Right? That will determine where is your actually economic center. There's a term called as economic center, but again, that will be too complicated. If you might be sitting in India, but if you're working for an American company, they will not transfer salary into Indian bank. They will pay the salary in the American bank because they assume you're working for an American company. Okay. Why product tax not in base prices, as that is also mandatory cost? My dear, again I'll repeat it. The basic prices refers to the bare minimum that the manufacturer is expecting, right? When he produces, what is the expectation of the manufacturer? That is the idea of a basic price. The product tax is imposed, no doubt, but it goes to the government. Manufacturer doesn't keep the product tax. They will give it to the government. That's the reason it is not counted in the basic prices. Okay. Sir, if previously we used, just a second. We previously used a factor cost, then GDP under output method and expenditure method would vary and they wouldn't be same. My dear, they will be same. And again, don't try to complicate it. It's not a very new concept. Concept of GDP has been there for many decades now. You are learning it recently, but it's not a new one. It will be same. Don't worry about it. So I think GDP of India is way higher than it is shown because value produced by small businesses and individuals can't be calculated. Trust me, it's not overblown like this. These are estimates. Point number one, these are estimates. And point number two, if you're talking about small companies, right, basically informal economy, there are surveys which are conducted to account for GDP calculation, right? Those estimates from informal economy are also taken into consideration. Okay. Market price will be more, but then either current calculation is wrong. Okay, I don't know in what context you're asking about this. What about companies not recognized by producing sufficient products? How it is implemented? Again, I'll repeat it. What you're talking about is a concept of informal economy. Informal economy. Again, this is a third class. Later, you will understand what is the idea of informal economy. To account for the production done by informal economy, surveys are conducted. Is it okay? Second time I'm telling you this. Surveys are conducted in order to find out how much is the production done in the informal market and added to the GDP value. Okay. In market equilibrium, there is a surplus because it's above equilibrium price and all the goods produced won't sell. As a result, some will remain and count in surplus. When the price is above the equilibrium point, seller will supply more goods to make profit. How do we arrive at a surplus in the market? Understand the logic first. How do we arrive at a surplus in the market? Generally, we arrive at a surplus in the market because on one side, if you look at the law of demand, right, if you look at the curve, you will realize that the price levels will start increasing. And as a result of this, the demand will start depleting, coming down. And I've told you this, right, while discussing, I've told you all of this. I told you if the price of this bottle goes up from 100 to 120, you will start producing more. I will also start producing more. So on one side, what is happening? We'll produce more and supply more in the market. But on the other side, the demand side, what is happening? Price of the bottle goes up from 100 to 120. What will happen to the demand? Demand will go down. So the supply is increasing, demand is going down. So what is going to happen to the prices then? We are at a surplus situation in the market, automatically the prices will have to be reduced. Okay. NSO doesn't use income method. How does it use expert? I've already explained it. Okay, done. Let's take a break now. So I'll restart at 7:15. I'll restart the session at 7:15. Okay, take a break. I'll restart at 7:15. Okay, welcome back. Am I audible? Am I audible? Can we start now? Okay, done. Great. So the same calculation that I've done so far regarding NDP, net domestic product, it is given here. Please have a look at it. Imagine there is a company A. It has produced a machine, and this machine was purchased by company B. Right. So final good value is, let's say, 1,000 rupees. Company B will use this 1,000 rupee worth of machine to produce one more good worth, let's say, 2,000 rupees, sell it in the market. The GDP will be 3,000 rupees, but the NDP, right, net domestic product, NDP, net domestic product will be 2,000. Right? Why? Logic is simple. Company B has purchased it this year to replace existing machine. That's very important. Replace existing machine. That is depreciation. And because it is depreciation, 3,000 rupees is the GDP value minus the value of the machine. That's 1,000 rupee. You will get NDP of 2,000 rupee. Done. So one is GDP, second one is GNP, third one is NDP, net domestic product. Okay. Now, fourth one, net national product. Right? Net national product. Now, there should not be any difficulty for you people to understand what is a net national product. Point number one, when you say net, is it okay? It simply means you are going to account for depreciation. Any problem with this? Please do let me know. Because we have discussed the term net domestic product. We are using net national product. What do you mean by net here? Now you are going to account for depreciation. Second, national means you are going to account for production done by citizens or the nationals of a country. How do I define it? NNP, net national product, is the market price of all the goods and services which are produced by residents, citizens or nationals of a country after accounting for depreciation. I'll repeat the statement. It is there here. Net national product, NNP, it is basically the market price of all the final goods and services. All the final goods and services which are produced by residents of a country after accounting for depreciation. That is called as a net national product. How do I calculate net national product? Two ways here. First, you can use GDP, gross domestic product. You can use two different formulas here. Do not be confused. GDP you can start with. From the gross domestic product, logic is simple now. Let me know if you find this difficult. You want to have net, you want to have nationality. You have GDP number, you want to get the net value now. You also want to get, right, the nationality value. What you can do? From the GDP, first you can adjust it for net factor income from abroad. NFIA, net factor income from abroad. Now, once you adjust the NFIA with GDP, what you will have? Gross national product. Any problem? Gross national product. Now, from the gross national product, if you adjust for depreciation, if you basically take out depreciation value, what you will have from this? You will have net national product, NNP, net national product. So you will start with GDP, you will arrive at NNP, right? That is the net national product. Any difficulty? What is NFIA? My dear, it's not even been 3 hours that we have discussed this. Not even 3 hours. Forget about 1 day, 2 day. Net factor income from abroad, already forgotten. Two people are asking what is NFIA? Net factor income from abroad. Right, my dear? This is very bad. As far as I'm concerned, this is very, very bad. It simply shows that you're not focused on anything that is happening in the classroom. Okay? Right, so this is how you can use the concept of GDP. You can use the concept of GDP to arrive at NNP. Now, someone will say, no, sir, I will not do like this. I will start with GDP, then I will adjust for depreciation, then I will adjust for NFI. Left to you, right? Left to you. Don't worry. but formula is simple. You can go from GDP to GNP, then GNP to NNP. But what does it represent? NNP simply means whatever is the production of final goods and services that is done by residents of a country. Now think of this, residents of a country after accounting for depreciation. Now if I write GDP, GNP, NDP and NNP, and if I were to ask you which is the most qualitative indicator to represent productivity of nationals or the residents of a country, what will you use? I'll repeat the statement. I've written 4 indicators: GDP, NDP, GNP as well as NNP. And my statement or my question is, which of these 4 indicators will give you quality data about the productivity of residents of a country? It has to be NNP. It has to be NNP. We have discussed how these reforms will, how refining will happen. Why GNP is better than GDP. Why NDP is better than GDP. Now, I've calculated for depreciation. I've also calculated who is contributing, whether it is a foreigner or a citizen, right? All of that will get accumulated in the concept of NNP. So can I simply say that NNP is a much quality indicator representing productivity of an economy, productivity of a country, residents of a country compared to the remaining 3. Right? That's the reason. Please remember this. And what is the use of NNP? Where do we use the concept of NNP? You will come across a concept of national income. You'll come across the idea of a national income. Now think of this. National income. Can we use GDP as a pure representation of national income? I hope you understand. Can we use GDP and say GDP is national income? No, you're talking about national income, right? You'll have to focus on residence. You have to focus on nationality concept. That is the reason generally NNP, because some of you will simply say, sir, in that case, why not GNP? And some of you will simply say, if you want to talk about national income, why not GNP then? And my dear, tell me between GNP as well as NNP, don't you think NNP is a better quality indicator? Because GNP will tell you what is the market value of all the final goods and services produced by nationals of a country. So the argument remains the same. What if some of these final goods and services are used for replacement? Right? In that case, NNP will be a much better indicator compared to GNP. Right? So NNP is used as a representation of a national income. Now let me ask you one more question. You are calculating NNP at market prices, just like GDP. Right? Just like GDP, you are calculating, right, NNP at market prices. Now, don't you think rather than calculating NNP at market prices, it makes better or it makes a better qualitative data if you calculate NNP at factor cost? Understand my argument here, right? You are calculating NNP because GDP is at market prices. You are refining it to arrive at NNP. But my argument is you are calculating NNP at market prices. You also have NNP at factor cost. I am saying NNP at factor cost is a better indicator compared to NNP at market prices. If you ask me why, what is the difference between a factor cost and a market prices? Subsidies. Right? Subsidies and taxes. Do you remember this? The difference between a factor cost and a market price, what is the difference? Difference means what is not accounted between both of them? Subsidies and taxation. Now tell me, subsidies and taxation, do they represent productivity? I hope you understand my point here. Subsidies and taxation, do they represent productivity or salaries paid to the employees? Or, right, let's say profit earned by the companies. Or, right, let's say rent paid on the land that is taken, etc., etc. That represents a better productivity number. And that is the precise reason factor cost, NNP at a factor cost. This is what NCERT says. Please remember this. I'll repeat it. This is what NCERT says. NNP at a factor cost is the purest form of national income. I'll repeat it again. NNP at factor cost is the purest form of national income. NNP will give you national income, but you can get NNP at a factor cost also. You can get NNP at market prices. But between market prices and factor cost is a better indicator. That is the reason. Please have a look at the next formula now. Please look at the next formula. NNP at factor cost plus indirect taxes minus subsidies is equal to NNP at market prices. Any problem with the formula 1? Let me know. Any problem with the formula 1? You should not have any problem. Why? Factor cost plus taxes minus subsidies is equal to market price. I can use it for GDP. I can use it for GNP. I've used it for NNP. So NNP at factor cost plus indirect taxes minus subsidies is equal to NNP at market prices. What if I want NNP at factor cost? Take both of them, transfer it on the other side. Take both of them, transfer it on the other side. You will have NNP at factor cost is equal to NNP at market prices minus indirect taxes plus subsidies. Any problem with the formula number 2? Any problem, right? Formula 2. Basically, I'm using the same thing. Only thing is that I'm calculating at NNP. Okay. This NNP at factor cost is the purest form of income. That is purest form of national income. In fact, I'll show it. Right? Have a look at this. Don't by heart this data. By the way, many of you will do the same mistake. Do not by heart this data. If you type in the Google, they'll say that per capita income has doubled in the last 8 years. I've not discussed PCI. Have patience. Per capita income has doubled in the last 8 years. This is what they will give you in the Google. Right? Every newspaper carried it a couple of months ago. But when you calculate per capita income, what do we take? Per capita income, please look at the numerator here. Please look at the numerator. Per capita income is equal to national income divided by population of a country. How many citizens, nationals are there in a particular country? Take that and divide it, or divide the national income by population. What you'll get is per capita income, right, for India. Now, very recently, this was there in the newspaper. The per capita income for India has doubled, they will say. Right? Has doubled in the last 8 years. Now, so many data is given. Please do not by heart this table. I hope you understand this. Please do not by heart this table. Let's start. You have GDP. You have GDP. You have GNI. You have NNI. You have GNDI. Many of you will ask me, sir, what is this NNI? NNI is net national income. Net national income. Just some time ago, we have discussed this concept. National income, NNP, factor cost, etc. Right? So understand this. When you come across net national income, what are they talking about? They're talking about NNP. Is it okay? They're talking about NNP, net national product. I'll come back to this table. Don't worry. But again, I'll go back to the earlier discussion. I'll show you that table. Please have patience. We have NNP at factor cost. We have NNP at market prices. NNP at factor cost will give you the purest form. But generally, in the calculation of GDP, we will take market prices and calculate. Now, many of you are asking, sir, if NNP is most purest, why does everybody focus on GDP? Let me ask you a very simple question. How many of you believe that taxes will be uniform in all the countries? Think of it. How many of you are of the belief that tax rates will be uniform? How many of you believe that subsidies will be uniform? How many of you believe that depreciation will be uniform, etc.? Now, the problem is very simple here. If you want to move from GDP to NNP, Okay, if you want to move from GDP to NNP, don't you think you'll have to start adjusting for depreciation? You'll have to start adjusting for the taxation. You'll have to start adjusting for subsidies, etc., etc., etc. If these are not uniform throughout all the countries, don't you think numbers will vary from one country to another country? That will create division, that will create imbalances, disparities in the NNPs of every country. I hope you understand my point here. While calculating GDP, you did not subtract anything like, let's say, taxation, etc., etc. But if you want to calculate NNP, have a look at it. If you want to calculate NNP, you will have to subtract depreciation. You'll have to account for production done by nationals of a country. How many dollars are coming into India in the form of salaries? How much dollars are flowing out of India in the form of salaries? Right, in the form of profits coming into India, profits going out of India, etc., etc., etc. Rather than this, in case of GDP, is there any adjustment there? Think of it. In case of GDP, is there any adjustment there? No, you are not adjusting anything. You're simply taking market prices into final goods and services. Right? That is the precise reason. The numbers will vary from one country to another country. The policies, the taxes will vary from one country to another country. You cannot have a uniformity. Rather than this, they'll simply say, let's take market prices, let's multiply that with final goods and services, you will get GDP of a country. Right? And this is the precise reason why every country will keep on running behind GDP number. Right? Every country will simply take GDP number. Rather than focusing on NNP, NDP, etc., etc., they'll simply focus on the concept of GDP, calculate GDP, and give you that data. In fact, you tell me, forget about whether this is being discussed or not, you tell me, have you come across concept of NDP in the newspapers? You tell me now, have you come across concept of NNP in the newspapers? Have you come across GNP in the newspapers? You will not come across all of them. What government of India focuses upon? What government of India focuses upon? Every country will simply calculate GDP and give it to you. Right? Now is the logic okay? Why everybody uses GDP rather than calculating and giving you or competing in any other indicator? That is basically the GDP at market prices. Okay? Right? So this is the calculation. GDP, GNP, right? GDP, GNP, NDP, NNP, and finally NNP at factor cost. NNP at factor cost. Right? So these are the indicators. Right? So these are the various indicators. For comparison, we generally take GDP itself. Right? We'll take GDP itself. Now, what are the limitations or issues in calculation of these kind of indicators? Okay. What are the issues here? First one, non-availability of data. Non-availability of data. Data collection is very, very difficult in India. I hope you understand the point. Data collection is very, very difficult in India. You might simply say, sir, I will collect from everyone, etc., etc. Collection of data is never simple. Can I prove it? I'm pretty sure all of you have had food outside, tea outside, you have purchased something from the roadside, etc., etc. Now, how many of you believe that whatever you have purchased in the market, all of them are registered with the government? I hope you understand my point here. Right? How many of you are under the impression that whatever you have purchased so far, all of them are registered with the government? And that is important, by the way. Some of you will ask, why is that relevant? My dear, what is GDP? Market prices of all the final goods and services. Now, if some of the final goods and services that you have purchased, data is not received by the government, don't you think GDP calculation will become equally important? Right? It will become equally important. Right? That is the reason collection of data is very difficult in India. We have simplified for the methodology of calculation, but collection and calculation is never easy. And that is the precise reason. I'll come to the second point here, time lag, right? A time lag. What do you mean by the term time lag here? There is certain time period that is taken by the government authorities to collect the data and to give you the results. I understand this, right? The methodology is that we will collect the data, then we will tell you what was the GDP value. But for me to collect the data and to give you the result, it will take certain time. And that is also a problem. I'll tell you why. Right? Understand the logic here. Imagine for the month of January, February, and March. For the month of January, February, and March, they will collect the data, and in the month of May, they will tell you what was the GDP value for these 3 months. Now 2 months are taken. I hope you understand this. March is over, April and May. In the month of May, they are telling you what was the GDP value. Now, what if there is something wrong in the economy? Right? What if production has come down? Unemployment has gone up? You will come to know about that after 2 months. Don't you think this is a problem? Let me know if you disagree. You have come to know in the month of May that January, February, March, unemployment rate was high. January, February, and March, our production has gone down. What would you prefer? Getting the result much soon so that you can make policies to address the issue, or waiting for 2 months, 3 months, 4 months to get the result, then making policy? Right? So that lag period, that is a delay in the sense collection of data, then submission, then giving out the result. There is a time period that is taken. That time period, many of the times after the situation is over, you will come to know that there is a problem in the economy. Right? That is the reason. Right? That's the reason I've written it as a part of issues. But again, please understand the problem also. Some of you will simply say, in that case, let's make it faster. It's not that easy. Some of you, I know that, right? You are very enthusiastic. You want to change the whole system right now. Even before becoming IS, you want to make everything correct right now. There have been many efforts earlier also. It's not that easy. Right? I'll give a very simple example. The sheer size of the Indian economy. Think of this. Right? The sheer size of the Indian economy. Can you imagine the number of companies that are present in India? The kind of calculations that will be involved, the kind of non-registered informal suppliers that are present in the Indian economy. There are many problems, right? That is the precise reason it will take time for them to gather, then publish the result. Next, existence of non-monetized consumption. Existence of, right, non-monetized consumption. What do you mean by non-monetized consumption here? This is what NSO says. Please understand this carefully. There are certain regions in India where, I'll take an example, agriculture sector, where people will work on the land. In return, money is not paid. Food grains are given. I hope you understand this. Basically barter, right? There are certain regions in India, right, rural parts, where people will work in the agriculture sector. Wages are not paid. Money is not paid. In return, food grains are provided. Now tell me, if money is not paid, wages are not paid, don't you think you cannot count this as a part of GDP? I hope you understand the problem here. Right? If you monetize means giving value, money value. If you monetize the services, if you simply say you work for 1 day, I will give you 200 rupees. That 200 rupees, you can count it as part of GDP. But you're not monetizing it. You're not giving it value. You're simply saying work for 1 full day, I will give you 2 kgs of rice. How can you count the 2 kgs of rice in GDP? That is basically non-monetized consumption. Non-monetized consumption. money is not paid, rather, right, something else is given in return, right? You will not be able to count it as part of GDP. Okay. Parallel economy basically means black money. Right? Black money counting in the GDP will be very difficult. You cannot count it. Doesn't consider the development, impact on the environment, etc. Right? That is basically when you talk about GDP, market price of goods and services. But in the process of producing goods and services, have you polluted? Have you consumed a lot of natural resources? Right? Have you basically given out a lot of carbon dioxide emissions? Answer is yes. Are you accounting for all those expenses? Are you basically considering the cost of all of them? Absolutely no. Right? You will basically run behind GDP number, market price of all the goods and services. Okay? Right? That is basically one more limitation whenever you talk about GDP, NDP, etc. Okay? So these are the limitations or issues. Let me go to the next concept, per capita income. Right? Per capita income, PCI. Now, whenever you come across the term per capita, please remember this. Whenever you come across the term per capita means per person. Per capita means per head or per person. Now, what is this importance of per capita income? Per capita income, I'll give you the definition first. It is the average income or earning done by every national of a country. It is the average income earned by every national of a country. That is basically the idea of a per capita income. Now, how do we calculate per capita income? Whatever is the national income divided by population of a country. Whatever is the national income divided by population of the country. And please understand this, the NSO will use GDP to calculate per capita. NSO will use GNP to calculate per capita, etc. You don't worry about it. Do not by heart numbers also. Not at all relevant. But please understand the logic here. I will give you a statement. Understand the logic. Per capita income is qualitatively better than the GDP numbers, or even for that matter, NNP. I'll repeat the statement. I'll give you explanation. Follow that carefully then. Per capita is, whether you talk about per capita GDP, per capita NNP, whatever it is, that is a better qualitative data compared to simply looking at the GDP number or simply looking at the NNP number. Let me prove it. Understand this carefully. Imagine there is one country here. Right now in the country, let's say there are only three nationals. Only three nationals. And the value of the goods and services which are produced in this country is, let's assume a simple number. Take a simple number so that calculation becomes easy for you. 90 rupees. So what will be the per capita here? Tell me, what will be the per capita? Per capita here will be 30. Any disagreement? I'm taking very simple numbers. Right? You can take $3.5 trillion, spend half an hour on that. Do not waste your time. Let's assume the population, right? The nationals, number of nationals, population of a country goes up to 5. Goes up to 5. At the same point of time, net national product, or for that matter, take even GDP, doesn't matter. Concept is important. At the same point of time, net national product goes up to 100 rupees. Now, if you focus only on the net national product, if you simply look at only the net national product, you will feel, okay, there has been a growth. There has been improvement in the net national product, which is good for the country. But now, calculate per capita. Calculate per capita. When you calculate per capita, what will be NNP? NNP per capita is 20 rupees, which means now per person earning is 20 rupees. Now, is the logic okay? Is the logic okay? Just looking at the GDP value or NNP value or NDP value, no doubt, they will give you certain idea. But when you look at the per capita NNP, per capita GDP, per capita GNP, that data will be much more qualitative compared to only GDP, only GNP, or for that matter, only NNP. Any problem here? Let me know. Any problem? And if you basically ask me, sir, whether it is 30 rupees or 20 rupees, what difference does it make? My dear, earlier, per person earning was 30 rupees. Now, per person earning has come down to 20 rupees. Do you think that the situation at the ground level has improved? Of course, no. I hope you understand. Of course, no. That is the reason per capita, it is always a better income or better indicator, qualitative indicator compared to the remaining. Okay. Now, next important point. No doubt, for every country, we calculate per capita incomes. For example, I've given you the table here. Please have a look at it. But again, this is my request to all of you. Do not by heart this data. UPSC will not ask you this data. Please do not by heart this data. I've given the table for a very simple reason. The government of India very recently has been highlighting the fact that the per capita income in case of India, that is based on national income, per capita income has doubled. That is back in 2014. Back in 2014, the per capita income was somewhere in the range of 86,000 to 87,000 rupees. I repeat, per capita income back in 2014 and 2015 was somewhere between 86,000 rupees to 87,000 rupees. But as per the latest data, this is the latest data. Can you see the number here? Please look at the year for which the data is provided. As per the latest data, the per capita income has become 1.72 lakh rupees. 1.72 lakh rupees, which means from 86,000 rupees odd to 1.72 lakh rupees, the per capita income has almost doubled. Right? Has almost doubled. Right? That has been the point that the government of India has been making for the last couple of months, saying that, see, on the ground our policies are working. Right? More employment has been generated. Right? More production has happened. GDP has increased. And that is the reason per capita income also has doubled. And again, for discussion purposes, I've given this data. But beyond that, please do not by heart it. Please do not by heart it. Because there are two sets of data here. There is one more data given. Second set of table is given. That is, I'll come back to this when I discuss the concept of inflation. I have not yet discussed inflation. Right? There is a concept of the calculation of per capita at current prices, calculation of per capita at constant prices. And I know some of you will be concerned. I have not yet discussed that. Have patience. What is the current price? What is a constant price? I have not discussed. I'll discuss. Have patience. Okay? Right? So this is the discussion regarding per capita. But please understand, there are certain issues regarding the focus on the per capita income. Right? There are certain issues. PCI is better. I'm not saying PCI doesn't have any issues. Understand my statement here. If you compare, if you look at only GDP or NNP, per capita income at NNP is much better indicator. PCI, GDP is a much better indicator. But does it mean that PCI does not have any flaws? Does it mean that PCI doesn't have any drawback? Absolutely no. PCI also has a lot of flaws. Point number one, PCI is basically an average. PCI is basically, it is an average. Right? What do you mean by the problem of averages? Right? Imagine there are three people, A, B, and C. A has earned an income of 0 rupees. B has earned an income of 100 rupees. C has earned an income of 1100 rupees. Point number one, is there income inequality or not? Let me know. Is there income inequality or not? Answer is yes. But now if you take the per capita income will become 400 rupees. Per capita income will become 400. Right? Now, this is point number one. Looking at the per capita income, you will not be able to find out inequalities in the system. Point number 2, right? Let's say per capita income has increased from 400 rupees. Now per capita income has become 500. How can it become? A has earned 0 rupees now. B has earned 0 rupees. C has earned 1500 rupees. Per capita income is 500 rupees. But don't you think the situation at the ground level, has become much more worse? Think of it. The situation at the ground level has become much worse. Earlier, right, imagine only one person was poor. Now 2 people are poor. Earlier, income inequality was there. Now the income inequality is much, much higher. That is the problem. Right? Is the logic okay? Right? So per capita income, right? Yes, it has increased over a period of time. But will the per capita income tell you how many people are poor in India? Will the per capita income tell you how many children do not have access to nutritious food in India? Will that tell you, right, how many people do not have access to healthcare in India? Absolutely no. Right? It is just a quantitative data. It will give you only numbers. That's it. It will not give you any quality information. Is it okay? Right? So it is just an average. Point number 2, it does not provide information from various sectors. From various sectors, how much is the contribution? Right? No, it will not give you that information. Right? Can I tell you why? Why this is a problem? In case of India, there is one sector called as agriculture sector. Agriculture sector. And agriculture sector accounts for 49% of working population. Have a look at it. Right? Agriculture sector accounts for 49% of working population. Now, will the per capita income give you any idea of what is the contribution from agriculture sector? Right? Think of it. Can the per capita income tell you, right, how much is coming from which state? Answer is simply no. It is very, very difficult. Right? They will simply tell you per capita income has doubled to 1.72 lakh rupees. But what is the information you can derive out of it? Can you find out how many people are poor? No. Can you find out, right, how much, right, let's say contribution comes from agriculture? Not possible. Third one, standard of living is affected by government expenditure. This is an important point. Why? Many of the times, they will try to take the per capita income to say that standard of living of people has increased. Let me prove it. Let's say in the year 2000, per capita income was 80,000 rupees. Arbitrary number, hypotheticals, just to make you understand. In the year 2000, per capita income is 80,000. In the year 2010, per capita income becomes, let's say, 1.2 lakh rupees. In the year 2023, again, hypothetical number, let's say per capita income is 2 lakh rupees. Now, if per person incomes have increased, does it not also mean that the standard or the quality of living of people in India on an average has increased? Let me know if you disagree right now. I'm repeating it. If the per capita incomes have increased, does it not mean that on an average, the quality of living in India or the standard of living in India also has improved? Does it mean or not? Answer is yes, by the way. But there is one problem here. The problem is that the quality of the standard of living is affected by even government expenditure. Not just our earning. Even government expenditure will affect what is the standard of my living. For example, imagine a person earns an income of 100 rupees. Do you think only this 100 rupee will determine what is the standard of living of a person? How many of you believe that? Right? I'm saying, imagine there is a person who earns only 100 rupees a day. Does it mean only this 100 rupee, that is the income, will determine what is the quality of living of the person? Answer should be no. I'll tell you, answer should be no. Why? What if government provides free electricity to this house? What if government provides free electricity? Don't you think electricity consumption is a part of standard of living? What if government will provide a free health care? What if government will provide free bus transportation, free education, etc.? Now tell me, does the point make sense to you or not? Generally, what they do is they'll take the per capita income number and say that standard of living has improved. If there is, right, on an average, increase in the per capita income. But the argument to this is, it is not just the per capita income number, but rather even the government expenditure also, which will have an influence on the standard or the quality of living of the people. Is the logic okay? Anybody has a problem with this? Let me know. Anybody has a problem? Fourth point, I'll discuss this later. Please have a look at this. The per capita income is given in rupees. Per capita income is given in rupees. But you want to compare what is the standard of living of Indians with the standard of living of people in USA. I'll repeat it. Right? Per capita income is given in rupees. For example, we say PCI, per capita income of every Indian is 1.72 lakh rupees. Now tell me, can you compare what is the standard of living in India based on the per capita income with the citizen in USA? Think of it. Right? Is it possible? No. Why? Some of you are saying yes. How? If you say yes, tell me how. It is not possible. Why? In USA, currency used is dollar. Currency used is dollar. We are giving per capita income in rupees. How can you compare rupee versus dollar? I hope you understand this. Currencies are different. Right now, some of you will simply say, sir, we will convert it. Whatever is the exchange rate, I know I've read it in economics. Right? Whatever is the exchange rate, I will convert the rupees into dollars. Even that will be wrong. Why? To understand the standard of living, you just don't have to compare. You cannot simply compare the currencies using whatever exchange rate is there in the market. You need a concept called as purchasing power theory. I will repeat it. You need one more theory called as purchasing power parity. PPP, purchasing power parity. I've written it. PPP, purchasing power parity. And we have not yet discussed that. We will discuss this in the international trade. We have not discussed. I know that. Right? We'll discuss this under the international trade. So these are some of the concerns or issues related to per capita income. Done? Okay. So any problem so far? Because we are done with GDP, NDP, etc. Any problems? Can I go to the next one now? What is the definition of PCI? Per capita income means, on an average, what is the earning done by a national of a country? I've written it in the slide. Please go through that. Third point. I'll repeat it. Understand this. What is the use of per capita income? We will use the per capita income to represent what is the improvement in the standard of living of people. What is the improvement in the quality of living of the people? For example, if the per capita income has increased over a period of time, it simply means standard of living of the people also has improved. All I'm saying is only per capita income cannot be used to represent quality of living. Why? Apart from what is my income, government will also provide lot of assistance to me in the form of education, health care, right, in the form of food grains. Don't you think that will also determine what is the standard of living? That is the third point. Okay? Done. Right? So this is a discussion regarding GDP, NDP, etc., etc. Now we will enter into a couple of more current affairs concepts. Focus on this. You will not get these in the newspaper. I'm sorry, in the books. Focus on the discussion. Let's start. First one is vicious cycle and a virtuous cycle of a growth. Vicious cycle and a virtuous cycle of a growth. First and foremost, all of you understand cycle means what? Right? Again, that is nothing new to you. I'm pretty sure in the high school you have learned about cycles: sulfur cycle, carbon cycle, oxygen cycle, etc., etc. You will start from this point, you will go here, you'll go here, you'll go here, again come back here. Right? Whatever you have learned in the high school, remember it. It will be helpful here. Now, the same continuous process in economics also we will apply. There are two types of cycles here. One is called as a virtuous cycle. Second one is a vicious cycle. What is a virtuous cycle? What is a vicious cycle? Virtuous cycle, I've given the definition. Please have a look at it. It basically represents a connection between factors in the economy. I repeat, a virtuous cycle represents interconnection, or let's say influence over various factors in the economy which will act with each other, which will be connected to each other, as a result of which lead to positive outcomes. Any difficulty in the first point? Let me know. Virtuous cycle. What is a virtuous cycle? It represents a process. There's a process. It is representing that. And what is happening in the process? Multiple factors are there, and these factors are influencing each other, are connected to each other, influencing each other, as a result of which there is a positive outcome in the economy. Now you will ask me, what do you mean by factors here? What do you mean by positive outcomes? Let me show a picture to you. Let me show a picture to you. Please have a look at the picture here. Right? Imagine the investments in the economy will increase. In fact, if you ask me, sir, how investment will increase, etc., then I will ask you, my dear, have you not revised what we have discussed yesterday? Right? I hope you remember this. Same cycle we have used earlier. I'll tell you the context also. Savings, investment, and capital formation. Do you remember that? I'm using the same thing here. Right? Imagine the investments in the economy will increase. And when the investments will increase, first point, don't you think employment will increase? Remember this. Don't you think employment will increase? Automatically, yes. And what about production? What about production? Will the production in the economy increase or not? Because if you're a manufacturer, if you invest and purchase, let's say, 2 more machines, what will happen to the production? Production will increase. And if the production increases, what will happen to employment? Employment will increase, and right, automatically unemployment will decrease. Employment will increase and unemployment will decrease. Now, if employment will increase, what will happen to the salaries or wages? Right? What will happen to earnings of houses? The salaries, wages of the houses will also increase. They will also increase. And when the salaries, incomes, or wages of the houses will increase, what will happen to the demand? Focus now. What will happen to the demand? The demand in the market will also increase. If the demand for, imagine again, your favorite bottle is here. You're manufacturing this bottle. The demand for the bottle goes up. What will happen to production? The production automatically will increase. Now tell me, right, is it a cycle or not? I started from this point. Did I arrive at the same point or not? Will the cycle continue? Of course, yes. Now look at the definition. Please remember the definition now. What is, again, do not by heart. I'll tell you a very bad habit of yours. And in fact, when I was a student, I was also the same. The habit was by heart everything without understanding. What are you observing here? Multiple factors are there in the economy. They are influencing each other, as a result of which you are having positive outcomes. What are the positive outcomes? Employment is increasing. The demand is increasing. Supply is increasing. GDP is also increasing. Is it a positive outcome or not? Such a cycle is called as a virtuous cycle. Such cycle is referred to as a virtuous cycle. Can I go to the next point here? Any problem with a virtuous cycle? Any problem? Let me know right now. When I ask you, type. When I'm discussing, don't type. This is my sincere advice to you. When I'm asking you, type. Now nobody will type. Great. Right? I'll tell you why. Right? I'll tell you why you should not type. Again, not to discourage you. When you keep on typing, you will not listen. Trust me. Right? You can do whatever you want to do. Of course, I cannot tell you anything. If the salary goes up, how the demand will go up? My dear, if you earn more salary, will you purchase more goods or services or not? This is a very basic idea. If you start earning more salary, will you purchase more goods or services or not? Of course, yes. Of course, yes. You will purchase. You will not trust me, but just observe yourself. Okay? Right. So, virtuous cycle consists of various factors which will influence each other, as a result of which, right, there are positive outcomes, good outcomes for the economy. Okay. Now, what about vicious cycle? If you have understood virtuous cycle, opposite is vicious cycle. In vicious cycle, there are various factors which will keep on reinforcing each other, as a result of which negative outcomes will be observed in the economy. Negative outcomes. Sir, any example of a vicious cycle? Please look at it. I've taken a current affairs example. All of you remember the concept of lockdown? Anybody here who is saying, sir, what do you mean by lockdown? Let me know. My counter question to you people will be, if you ask me what is lockdown, have you woken up from coma right now? Right? So lockdown, if you remember, now what will happen in a lockdown? The government imposed a lockdown. When government will impose a lockdown, were you allowed to go outside? Again, when I say outside, were you allowed to go to a mall? Were you allowed to go to, let's say, right, a tour? Right, sir, I want to go to Manali. I want to go to Shimla. Government said nothing, simply sit in home. Right, so when lockdown was imposed, tell me what will happen to demand for large number of goods and services. Right, what about goods and services demand? Automatically the demand will go down. Automatically demand will go down. And when the demand goes down, right, same example, you're a manufacturer of this bottle. The demand for this bottle goes down. Will you manufacture more now? Is the logic okay? Right, so automatically production will go down. And if the production goes down, will you keep the same number of employees? Will you pay the salaries to everyone? No, you do not require so many number of people. So you will reduce the number of employees. What will happen to unemployment? Unemployment will increase. People will lose the job, which means they do not have salaries now. If they don't have salaries, what will happen to the demand? Demand will again go down. So again, I've arrived at the same point. This cycle will keep on happening continuously. What are the outcomes because of this? Unemployment high, supply low, demand low, GDP also low. Are these negative outcomes or not? Unfavorable outcomes? Yes. That is called as a vicious cycle. That is called as vicious cycle. So two cycles here, virtuous cycle and a vicious cycle. Can I go forward? Can I go forward? Any problem with vicious and virtuous? Please let me know right now. Right? What is higher employment? Higher employment means more and more people will keep on getting jobs. Okay. Now, right, let's start. One more concept, pro and counter cyclical policies. Very important. In fact, UPSC has asked a question on this. Pro and counter cyclical policies. Now, before I start what is pro and what is counter, let me start with the basic idea, business cycle. Now, before I start even business cycle, I want you to go back, right? First class, 2 classes ago, in the first class, we discussed the concept of capitalism. Do you remember this? We discussed the concept of capitalism. And in the capitalism, one issue, one concern, one drawback of capitalism was capitalism leads to, right, the business cycle. I'll draw the arrow mark directly here. The capitalism will lead to business cycle. There are many drawbacks, right? I hope you know that. Many of you are answering. I'm happy, right? Sir, inequalities will increase, wealth inequality will happen, etc. Absolutely right. I'm focused on one of it. In fact, right, please check this after the class. In that I said, because of capitalism, there are business cycles which are taking place. And in front of that, I had written a statement, will be discussed in national income chapter. That is what I'm going to discuss here. Now, before I explain to you what is the issue of the business cycles here, I want to introduce one more term to you. I hope you understand. I want to introduce one more term to you. That is basically the next chapter. I'll come back to this slide. I'll come back to this. Please have a look at this. Right, I want to introduce one more concept to you. The idea of inflation. The concept of inflation. What do you mean by inflation? Inflation simply means persistent price rises in the basket of commodities. I repeat, this is a definition. Please remember this. Tomorrow we are going to start here only, but please have a look at it. What is inflation? Inflation refers to persistent rise in the price level of basket of commodities. Now you'll ask me, what do you mean by this? Imagine you will go to a shop, purchase group of certain goods. All of you will understand group here. Group means multiple goods you will purchase. This group is called as a basket. Let me know if you are having any problem here. You will go to the shop and purchase certain groups of commodities, goods or services for that matter. That group that you are purchasing, right, that is lot of goods or services that you are purchasing, it is called as basket. Now for those goods that you have purchased, let's say last year you used to pay 100 rupees. Last year you purchased the same goods, you paid 100. Now this year you are paying 110 rupees. This year to purchase the same goods, you are paying 110 rupees. Now can I simply say that the price level for group of goods, I repeat, basket means again group, collection. The prices that you are paying for the collection of the commodities here, the prices have increased. And this increase in the prices, it is called as inflation. Any problem here? This is the definition of inflation. Any problem, let me know right now. Right, so inflation is one concept. Tomorrow we'll discuss this in detail. Don't worry. We'll discuss everything regarding inflation in detail. I'm just giving you the idea of inflation. I'll not shift to the next chapter now. I'll continue with the earlier discussion only. But I needed inflation. Now, what is this concept of a business cycle? What is the problem with the business cycle? Let me go back. Okay, what is the problem of business cycle here? Capitalism. What happens in a capitalism? Employment will increase. All of you will agree? Employment goes up. And when employment increases, income earned by the people will also increase. More and more people will get the jobs. They will start earning more and more salaries. Now, if people will start earning more salaries, what if the demand increases by so much? The demand is higher than supply. Think of this. Right? Supply of goods is happening. I'm not saying supply stopped. Supply is happening. But imagine all of us will earn salaries in such a way that we'll start demanding more and more. Suddenly the demand is higher than supply. Now, can I simply say that will cause inflation? Is it okay? Right? All of you are answering the same thing. Right? Most of you said, sir, price levels will go up. If the price levels will go up, can I say that is nothing but inflation? Right? So inflation can happen in a capitalism. Any problem here? Inflation can happen in a capitalism, and that's a problem. Inflation remaining higher, it's a problem. Tomorrow we'll understand why inflation is a problem. I'll explain it to you. Inflation is needed also. inflation is a problem also, right? But I will tell you where it is needed, where it is a problem tomorrow, right? So inflation can happen. That's a problem. Second, in a capitalism, have a look at this capitalism, right? Let's say there is a pandemic. Understand this carefully. Vicious cycle. There's a capitalism model that is being followed. There is a pandemic. Now, please tell me, if there's a pandemic and the capitalistic economy is there, what will happen to investments? What will happen to investments? Right? During a pandemic, investments automatically will fall down. Is the logic okay here? So the problem is simple. Whenever there is a capitalistic economy like this, or even in a mixed model, mixed economy model also, that is wherever private sector is present, there is a concept called as a business cycle. And the meaning of the business cycle is economy will not keep on performing at the same level at all the points of time. I'll repeat it again. Business cycle simply means economy will never keep on performing at the same level every point of time. In certain situation, investment will fall down, GDP will also fall down. In certain points of time, inflation will be very high, etc. And these are represented in the form of phases in the economy. Please have a look at this. These are represented in the form of different phases in the economy. What are the phases? One is expansion. GDP will keep on increasing. I hope you understand. One is expansion. GDP will keep on increasing. But tell me, if GDP keeps on increasing continuously, is there a danger of inflation or not? And can GDP always keep on increasing? Don't you think there will be various external factors plus internal factors that will affect GDP? Right? Of course, yes. So after expansion, there is a slowdown in the economy. Slowdown means GDP will be growing, but the rate of growth will start slowing down. I'll repeat the statement here. GDP will keep on expanding, but the growth rate will start coming down. Now, what do you mean by growth rate slowing down? Please have a look at it. Imagine the GDP value today is 100. After 1 year, it will become 110. After one more year, it will become 112. Now tell me, has GDP increased or not? Point 1. Has the GDP increased or not? Right, from 2022 to 23, 23 to 24, GDP has increased. Point number 2, from 22 to 23, what was the growth rate in the GDP? 10%. From 23 to 24, what is the growth rate in the GDP? Less than 2%. This is a slowdown. Any difficulty in understanding this? This is a slowdown. This 10%, 2%, it is called as GDP growth rate. GDP growth rate. So GDP will increase, but the growth rate will start falling down. Right? That is called a slowdown. Right? So basically the idea is, after expanding, continuously expanding, economy will start slowing down. And after slowdown, if nothing is done, economy will fall into recession. Now please look at the definition of recession. Recession simply means growth rate is negative for 2 consecutive quarters. Growth rate is negative for 2 consecutive quarters. What do you mean by growth rate is negative for 2 consecutive quarters? Now, before I start explanation, tell me, is growth rate negative in the example that I've written on the slide here? Think of this. This example, is the growth rate negative? Growth rate is not negative. Growth rate is very slow. Or some of you are saying yes. How? I do not understand what you look at actually. I absolutely no idea what you're looking at. I'm asking, has the growth rate become negative? Yes, sir. Where? Here it is plus 2%. Here it is plus 10%. Simply SI, right? Okay, now growth rate becoming negative means what? Imagine GDP is 100. It will fall down to 90. Now tell me, is it a slowdown? Think of it. Is it a slowdown? From 90, let's say it will fall down to 72. If you say slow down, then please, right, calculate it correctly. It is a negative. Growth rate has become negative. GDP is not increasing. GDP is decreasing. That is the negative growth rate. Contraction. They will also use one more term, contraction. Is it okay? One more term that they use is contraction. So in the second example, GDP is not growing. GDP is contracting. That is negative growth rate. So if the growth rate for the GDP becomes negative in 2 consecutive quarters, for example, in quarter 1, growth rate is -3%. Quarter 2, growth rate is minus, let's say, 1.4%. Now look at this, please look at it. Can I say that growth rate is negative for 2 consecutive quarters? 2 consecutive quarters or continuously 6 months. But the problem with saying continuously 6 months is you can start anywhere. I hope you understand. If you simply say, sir, from March, continuously 6 months growth rate is negative, it is not recession, because March is a part of one more quarter. I hope you understand this. So rather simply say growth rate is negative for 2 consecutive quarters. Is growth rate negative, right? Let's say in quarter 2 and quarter 3, if it is negative for both the quarters, can I call this as a recession? Can I call this as a recession? Let me know. Quarter 2 of this year, quarter 3 of this year, is it recession? Again, answer is yes. Answer is a very, very right, correct. Now, has it happened in India? Has recession happened in India? Again, answer is yes. Please look at the financial year 2021, right? And just to make it much more clear, after pandemic, just after pandemic started affecting Indian economy, there was a recession in India. Okay, right? So any 2 consecutive quarters, whether it is this year or next year, doesn't matter. For example, some of you will simply say, so does it always mean same financial year? Again, answer is no. Right? So it could be quarter 4 of, let's say, 22, quarter 1 of 23. Is it okay? Quarter 4 of 22, quarter 1 of 23. Consecutive quarters, right? That also is recession if it is negative. So whenever you simply say 2 consecutive quarters, there is a negative growth rate, this is called as recession. Right? And finally, right, there is a recovery. Government policies will be implemented. Private sector will be promoted to invest in the economy. There will be promotion of recovery in the economy. Right? This is basically the concept of business cycle. Any problem in the business cycle, let me know. Any problem in the business cycle? Any issue? Right? So if there is any issue, please do let me know. What are the reasons of slowdown in the growth rate? My dear, have you not seen what happened during pandemic? Right? Everything has happened right in front of your eyes, and we have discussed vicious cycle. Right? And after discussion of vicious cycle, you are asking me what could be the reasons of slowdown. Right? I hope you understand. Recovery. What is the meaning of recovery? GDP will start increasing. Right? Very, very interesting questions you people generally ask. 100, 90, 72. Can we allow this to continue? No. Government policies will be implemented, etc., etc. From 72, the GDP will increase to 80. From 80, GDP will increase to, let's say, 92. From 92, it will increase to, let's say, 105. This is nothing but the process of recovery. Okay. Any difficulty? Then there is one more term called as a depression. Remember this. What is depression? Whenever the recession continues for a longer duration. I repeat, whenever recession continues for a longer duration, that is for at least 3 years, then this is called as depression. Is the logic okay? If the recession continues for a longer duration, -2, -3, -1.4, -8, continuously, quarter after quarter, you'll keep on achieving negative growth rate for 3 years, then that is called as a recession. right? So in case of India, we have experienced depression, recession very recently. Depression, no. The last time the global economy experienced depression was basically back in 1930s. The global economy experienced a depression, right? Back in the year 2008, again, we experienced a recession. 2020, we experienced a recession. But depression, no. Why? If recession is so dangerous, imagine, multiply that, right? Quarter after quarter, keep on adding unemployment, negative growth rate, lower demand, lower supply for more than 3 years. You can imagine what will be the situation of economy. Have you understand this? Right? So depression we have experienced many decades ago, but recession very recently, most of the countries across the globe because of the COVID have experienced it. Done? Okay. So this is a discussion of business cycle. We'll continue after this, right? What is pro-cyclical, counter-cyclical tomorrow. Now, before that, if you have any kind of questions, let me know. If you have any kind of questions, let me know so that I can discuss. Why do we use basket of commodities? Please understand. For a house, for example, yourself, will you purchase and consume only one good or group of goods? I hope you understand. Will you purchase only one good or group of goods? You will purchase group of goods. And that is a precise reason. Whenever you talk about inflation, we do not consider only one good. We consider group of goods. Again, I'm using the term goods. Tomorrow you'll understand. You can use goods. You can use combination of goods as well as services. For that, tomorrow we'll take it up. Don't worry. Okay. How to remove the time lag in this situation? Very difficult. You generally, for a country which is very vast such as India, it's very difficult to remove the time lag. Using the market prices would not give the true value of the country's output as it includes taxes and subsidies. Is it drawback in SNA system? No. Right. For example, I've told you from one country to another country, taxes will change, subsidies will change, etc., etc. That is the reason across the globe, generally we end up using GDP as an indicator. Okay. Any issue? Question 1 is 3 and question 2 is minus 1.4. Then has to be expansion. Where is question 1 is 3? My dear, I do not understand what you're saying. If you're talking about this, right, I'm talking about growth, right? There is a growth in the economy. You can see there is a growth in the GDP, but the rate of growth is actually slowing down. That is a slowdown. In case of the second example, the GDP is not increasing. GDP is actually decreasing. Okay, that is basically the contraction. Recession and contraction is the same. Please understand, contraction can happen for 1 quarter. Right? I hope you understand. Contraction can happen in 1 quarter, but will you call it as a recession? Please understand, no? Right? That's the reason I say recession is when the economy contracts for consecutively 2 quarters. Then how can you say contraction and recession both one and the same? No, both are not one and the same. Okay. Are we now in a virtuous cycle or vicious cycle? Now we are experiencing virtuous cycle. If we repair that machine, so replacing change is also depreciation. Technically, you're talking technically. I believe you're from a commerce background, because technically speaking, depreciation is a maintenance cost, the cost of maintenance. But even then, from the accounting perspective, even that is wrong. Even if you're from commerce background, I'm pretty sure you have learned about how the depreciation is calculated. That is, whether accelerated depreciation methodology is used or other depreciation methodology. So depreciation, like I already said, it's a very technical concept. For UPSC, you don't worry about it. Take it as I've told. The depreciation simply means expenditure incurred to replace the machine. Sir, you said contraction is similar to recession. Where did I say that? Where? You tell me where. I said contraction, if it is happening in 2 consecutive quarters, then it is recession. Arey Baba. Okay, done. Right, so we'll stop the discussion today here. Tomorrow we'll take up the discussion. I'll start from this slide. Tomorrow I'll start from this side. I'll directly start with what is pro and counter cyclical. Please revise it. Tomorrow, don't ask me when I say inflation. Don't ask me what is inflation. When I say expansion or when I say recession, please don't keep on asking same thing. Revise it, right? The PPTs are given for the same very purpose. Please revise it. Tomorrow, we'll start the discussion regarding pro and counter cyclical policies. Done? Okay, take care. See you tomorrow, same time, 5 o'clock. Okay, bye.